why don't we jump into what we're going to do today? We have a much larger class than usual, as you guys can see. And for those of you that are new here, welcome. What we do is basically once a month, we open up our Tuesday class. We call it Live Algo Hour. It's a bit of a misnomer. It's not actually an hour. We usually spend like 3 or 4 hours working on this every week. But basically what we do is we build an algorithm every single week. This time around, I think we're going to spend 2 weeks building, continue the one from last time, if you guys are all cool with that. You know, we didn't get a chance to finish it last time, but the results that Kevin, you're showing us look really impressive. So I'm definitely motivated to keep going on it. I think the rest of you guys probably would want to do it as well. But let me give the everyone who's new here a quick little synopsis of what this is all about, what we're going to be doing today, and kind of what you can expect. So as I mentioned, today it's the live algo hour. We do this every Tuesday, same time every Tuesday. We open it up to the public once a month, right? Just so you guys can see kind of what we do. Here is basically how it works. We'll do step one will be trading idea or presentations. People will present kind of what they're looking to build. You know, I can build a lot of algorithms, but I feel like everyone's kind of got their own ideas, and that's really the power of this group here, is that everyone has their own trading ideas, and we all kind of contribute, and we end up all helping each other out and doing a lot better overall because of it. So step one is trading idea presentations. Today, maybe Kevin, if you could go over it again really quickly to refresh all of our minds. Then we vote on what to build. We can do a vote if you guys want. I have a feeling most people are going to want to vote for this because I think you're crazy if you don't want to build this thing. But if you guys want, we could do a vote. Either way, we still got to finish off what we did last week. Then we'll actually build the algorithm itself. We'll spend the majority of the day today building out the algorithm. I'm going to be doing the coding, and you guys will be providing information about what you guys think we should tweak or change, and kind of just observing what's going on. Number four, we'll be tweaking it, and then we're going to get and run the code at the very end, right? So again, first step, how it works, we're going to do a trading idea presentation. If you have some ideas for algorithms that you want to build, please feel free to submit them, and we can look at if you want to build those or not. Then next step, we're going to vote, right? So we'll put out a poll. You guys will all get a chance to vote on this. Then next step will be actually build the algorithm. Right? As I mentioned, you guys can all contribute ideas, and I'll be the one coding. You guys will be saying what do you want to do and that sort of thing. Then we'll tweak it. Pretty much every algorithm needs some sort of tweaking. We want to test out, well, what if we change this and what if we change that? We'll be doing a lot of that today too, I'm sure. And then we're going to run the code afterwards. For those of you guys that are paying subscribers, you will have access to the Google Drive and to our GitHub thing. This is basically what it looks like. If you guys are curious, here's our strategy library. If you are a paying customer, you get access to this where we have a bunch of algorithms here and we keep adding to it. I actually made a little thing here for the options butterfly condor that we're going to do today. It's kind of all set up so we can push it in there. I'll get that all cleaned up afterwards, but it's pretty simple. You go in here, what algorithm do you want to do? Here's another one we worked on, options condor martingale. You can go through here, read what it's all about and, you know, all that kind of stuff. At the bottom is probably the more interesting part. You can look at the back testing results. For example, this one had a really nice back testing result, had like a 60% return on investment over this back testing period. So 60% a year or 500% in total, this thing returned, which is quite nice. But also with a very low max drawdown. So it's quite stable and very high returns is what this one had in particular. For example, right? This is not what we're doing today. Today, I think we're doing something even more interesting than this. But just as an example. And then if you guys want to run it, there's a little button here, run on Replit. You right click that, and that's pretty much it. You're running your algorithms, right? So if you guys were to join, and for those of you guys that are paying customers, you can go ahead and do that already. Right.
Where do you find the link to be able to access GitHub?
I put it inside of the Discord here. I'll put it inside the chat too.
Okay.
For you, Alex, I still need to give you access. So you guys, even if you click on this link, you'll get, I think there's 3 free algorithms in there. So you guys can play around with that if you guys want. But if you are a paying customer, you get access to our like more advanced stuff, right? So for example, this Condor Martingale strategy, this one is something really astonishing when we went through it. I personally want to put my own money into this sometime very soon. There's a configuration of this, by the way, that we did one time, and Kevin, you're actually on that call. It was like 250% a year. It was insane. But yeah, it's a specific configuration of this. Either way, that's the link. You can click on that link. You can browse around in the strategies. And for those of you that are paying customers, if you don't have access, let me know. I'll add you to our GitHub thing. It's called a GitHub team, and then you'll be able to see all of them. If you are not a paying customer, you're only going to see the ones that are labeled public here, which is options rolling calls, diversified leverage, and crypto custom ETF. Those are the only ones you would see without getting access from us. Okay, cool. So yeah, so it's getting right in the code, and then you can also back test and run the algorithm yourself. So if you want to run any, like for example, algorithm today, it'll be up in that GitHub thing. You basically click a button, fill in your API keys, and you're off to the races. And that's it, right? It's like quite simple to get this up and running. We've had people that are couldn't speak English and are like 7 years old and can't use a computer, and they're able to do it in like 30 minutes. So if they can do it, I'm sure you can. Okay, cool. Speaking of which, really quick sales pitch before we start thing today. If you guys want to get access to this class and you want to get access to the code that we produce in this class and all the stuff in our library, there's 2 plans that you can do that with. There's a pro plan, which currently is $249 a month. Prices are going up next week. There's going to be $349 a month next week. You get access to this class right now, the live algo hour with all the code. You get access to all of our workshops. You get access to our trading signals, which we have here. You can basically watch these algorithms trade. If you think it's nonsense, you can actually just watch it make money. Here's one example. This one, I think, is not working right now. I got to actually take a look at what's wrong with this. But for example, this algorithm was running. Actually, no, I think this one's good, actually. Yeah, so since February 12th, been 2 weeks, up 10%, for example. Crypto EMA trending. Here's another one. This one's a rocket ship, not surprising. Since November 30th, up 24%. You can basically watch it, see what it's doing, follow its trades. You can do that sort of thing, which could be helpful if you want to understand an algorithm before you run it, or it could just be, if you want to just copy it and run it. So that's our trading signals. You also get access to our Discord community. So you can basically talk with everyone else. Here's our Discord, right? Live algo hour, you see here, we're always going back and forth, talking about everything we're working on, right? Here's Condor backtest and da-da-da, right? We're talking about a bunch of different things. A very active community, as I'm sure you guys can all attest to. You also get the Python for Finance course, which will teach you how to apply Python to the world of finance. And then you also get the algo trading course, which will teach you how to build your own algorithm from scratch if you want to do that. And also kind of like how to run our algorithms, how to adjust them, how to make them, kind of fit into your thing, back test them, all that kind of stuff. That's the algo trading course, which also is getting rebuilt right now. So for those of you guys that are customers too, I'm rebuilding the algo trading course right now. You'll see brand new algo trading course probably starting to go in like a week or so. I'm a little bit behind because of this kid, but I'm going to start recording that probably over the weekend or Friday, something like that. All right, so you guys will start seeing a brand new algo trading course very soon too. So that's our pro plan. If you guys want to go all out, you could join our all access plan. That's $5.99 a month. This is also going to go up in price very soon. You get everything in the pro plan. You get access to all the course recordings. We have lots of different courses, options course, an AI course, blockchain. You'll get to go through all those courses. We have weekly office hours. We're actually going to be converting this into a brand new feature, which is basically self-service. Or sorry, not self-service. Well, what were we calling this again? We call it like full service or full running. So let's say if you guys you don't want to mess with any stuff, you don't want to code anything, you don't want to go through any this kind of stuff, whatever, we will fully manage and run code for you, right? We'll run it for you. We'll make sure everything's going properly with it. If there's anything that comes up, we'll fix that. If anything new comes up, we'll show you that. We'll take care of basically everything for you here. It's fully managed algo trading stuff that will do that for you. Okay. And you also get 2 hours of one-on-one calls per month. So you get a lot of like extra help. All right. Cool. So that's Pro Plan. That's all access plan. Price is going up next week. So if you want to get it soon because it's going to be more expensive. Cool. And by the way, that's actually really cheap. One of the reasons why we're raising our prices is because we want to provide better services to everyone. But also, I've been kind of looking at our competitors lately and realized we are really, really cheap compared to our competitors. I was talking to someone the other day, they're charging like 5, 6K a year. And you can only get it with a year. There's no monthly thing to get one algorithm like what we have. One of them. I literally spoke to this guy and he described to me our Iron Condor martingale strategy. He literally described exactly what we do in that one algorithm, and they charge $5,000 for it. Meanwhile, we have that as one of our algorithms, and you can modify it, adjust it, and you can run it yourself. You have to, with those guys, $5,000 a year, you actually have to do it yourself. They tell you you have to like be in front of your computer, be ready at 3:45 p.m., exactly ready to place a trade. Whereas ours will just do it for you, and you'll have like 100 other algorithms to choose from. So we're definitely a really good deal. I'll tell you that much. And that's why we're raising our prices, or one of the reasons. All right. Okay, I got you guys writing some messages here. Ernesto asked, how do we upgrade? If you want to upgrade, go to lumiwealth.com. It's right up on the homepage. Just go here, Pro Plan and All Access are all on the homepage. Just scroll down here. Click on Pro Plan, click on All Access, whichever one you want to get. When you go in there, you can either do it monthly or annual. If you do it annual, you save extra money because it's, money up front, it's cheaper. So if you want to do that, you can do that there. If you're already on the starter plan, make sure you cancel your starter plan when you subscribe to this. We don't have like a thing to do that yet. If you send me a message, I can prorate your subscription too. That's fine. We don't have anything that does that automatically yet. But you basically go here, purchase one of the ones that you want, and then just cancel the one that you have. All right. EK also says, I subscribed to a pro plan last week. At your convenience, please give me access to the complete strategy library. For reference, my email is so EK, you need to give me your GitHub username. So go to github.com if you have not done this already. Go to github.com and create an account here. Once you create an account, you'll get a username. I just posted this into the chat, by the way. Once you create an account on GitHub, you'll get a username. Here's mine, for example, GRZESIR. When you get that, let me know and I'll give you access. I could do it for you right now. But you need to have a GitHub account and you need to tell me what your username is, and then I can do it. Okay, cool. All right, so that's it. That's my sales pitch. If you guys want to join, I think you'd be crazy not to, but that's up to you. All right, cool. So do you guys want to get started with actually building some algorithms? I'll take that as a yes. So Kevin, do you want to maybe go over again what we talked about last week so we get that fresh in our heads and we can actually continue building that or finish building that off?
Yeah, that's fine. Let me share my screen quick. Let's see. All right. Okay, so let's go through. I sent this out last time. This is an Excel sheet of trades I've done over the last 14 months using an iron butterfly. This is a 0 DTE iron butterfly. So you start the trade at 10 o'clock in the morning and you watch the trade throughout the day. And the purpose of it is to, get a 20% either a max loss or 20% take profit. In terms of the expectancy is positive. Let me go to strategy returns. Let me go through that summary. Let's see what I do with it. So the initial account sizes was 10,000. The number of trades over 14 months was 114 trading days. The number of winners was 89. The number of losers is 25. 78% of them were winners, 21%, 0.9 the losers. The average winners was 366. The average losers was 408. The expectancy is positive. The average winner realized percent profit was 28%, and the average loss was 19%. I made adjustments 67% of the time, or sorry, 67 adjustments out of 114 is 59% adjustments. And I'll explain what that is in a moment. So this is a list of all my trades that I made during that time period. During that time period, the S&P, starting from January 23 to February 24, looked like this. The S&P percent returns was 30% over that time. So that's kind of the benchmark. Ideally, we want to do better than that, for sure. So the strategy returns for this zero DTE butterfly was the following. So with a single lot, so that single lot means a single contract on SPX traded at 10 o'clock and then closed at 3:30 p.m. Before the market closed. Most of the times it closes even before that. Often it would be closed at noon. The percent return was over 200%. So that was just a single contract throughout as the account growth. But if you allow, as your account grows, you increase the lot size, for example, you can get close to 400% during that time period. And so I have in this file all of the trades as all 114 trades. These are trades that I did in OptionNet Explorer, and that looks like this, for example. And so the way you start the trade, this is Friday, February 24th at about 9:55. So I don't know if folks are familiar with butterfly trades. This is an option trade. It's essentially an income producing trade that you essentially make money off the theta decay of options. So what that means is there's a built-in time premium in the option trade, and essentially that time premium decays over a period of time. The last 30 days, the decay rate is very rapid. So ideally, you want to take advantage of that. This is Option's income strategy. So what we're essentially making profit off of is the theta decay of the option. So we are doing a short, or we're buying a short on this option. And the idea is for that, and we're collecting a credit at the beginning of when we buy the option. And we expect to hold on to that credit, and that will be our max profit. So let's go through one of these really quickly. So this particular day at 10 o'clock in the morning, this is SPX, and it's trading at 51.05. So what I would do is I would buy a short the 51.05 call. Calls are in this upper pane, and puts are in this lower pane. I would buy one, I would sell one short at 51.05. And this is an iron butterfly, so I would do the same on the put side. And these are at the money, exactly at the money. So these are bringing in premium. I'm bringing in the actual somewhere between the bid and let's say the mid price I'm bringing in 20.15 and $23.35. And let's see what that looks like. This is what the profile curve looks like. It looks like this, this pyramid or tent looks like a pyramid. So if you make money if the price stays within this tent. So if it's above in this area right here. So unfortunately, this particular structure is undefined because you could lose a lot of money if the price went beyond the tent. You can see this is minus $70,000 if you were to let this go. And it's also the same on the other side. But in order to mitigate that risk, what we do is we put wings on the tent on this to make it into the shape of a butterfly. Some people call that a butterfly. So let's say our wings were 15 wide. So what I would do is I would buy a call at 5120. Again, 5120 minus 5105. Well, that's 15. And then I would also do the same on the put side. I would buy 15 wide on that. That would be 90. Let's see. That'd be 90. And this is what the butterfly looks like. I'm going to expand it a little bit so people can see it. So the maximum loss would be $150 if the underlying price was outside the tent. And you can see this blue ball is the actual underlying price as of right now today at 10 o'clock. So if I start this trade, you can see what my current cost is $1,335 for this trade. And that is the credit that I'm going to receive when I start the trade. So I'm going to commit the trade now. Let's see. Yeah, this is the beta version. I upgraded to the beta version, so it's a little bit different. Oh, okay. So this will start the trade. So here we've committed the trade, and I'll follow it throughout the day. This is, again, Option Net Explorer has all the option call prices, so we can advance throughout the day. So now it's 10 o'clock, 10:05. Let's advance this a little bit faster. So this is 10:45. So you see our P&L is 0.59. We're starting to, in this particular case, we're getting close to the put side of the tent. So we have to be careful here. Like I mentioned, a lot of the times we have to adjust this in order to really see a profit in case it goes outside this tent. So let me go back another 45 minutes. See what happens. See, now we're piercing this side of the tent. And our P&L is about 3.55%. The trading rules I have is if the P&L goes to negative 10%, then we'll do an adjustment. So let's see how the price is doing. So this particular day, it gapped up quite a bit. You can see this is where the price is at. It's at around 5,100. So, this is It's a little bit difficult to say where this is going to be going, but you know it's going to be volatile. So let's keep moving forward in time, see how this evolves. So you can see it's retracing quite a bit. It gapped up and it's now retracing.
Hey, a quick question. When do you make money in this strategy? And do you want it to go sideways, go up or down, or what?
Anywhere within this tent. And then as the theta decays, you're collecting that theta. So so far it's noon. It's like 2 hours later. Our P&L is up 9.47%. So it's well within the tent. So I would let this keep going.
And do you get out the trade the same day or not?
Yes, yes.
Okay.
So you either, get a 20% profit or a 20% loss, and you get out the same day. Yes.
Okay.
Yep. So here we are about 12:30. I have no idea how this is going to work out. I haven't traded this day, so I don't know. I've had enough time. But you can see it's really clinging to the lower put side, but we still have a 10% P&L. And we're only in the trade about 3 hours. Ideally, what you would want you want it to be at the money at the end at expiration. You can see where the P&L goes way up. It has the potential of $1,300. So about a 1-to-1 risk to reward, which is excellent. The chances of that happening are rather slim, but it does happen. Let me advance this a little further. So we're up about 15% at this point. Here's our cutoff, 21%. So this would be a pretty good trade right here. You're up 21% and you're even outside the tent. So, and it's about 1600. So it's about 4 o'clock. So this would be a good point to cut it off. And so that's how it's done. It's that simple. Any questions?
So is this a 0 DT or 1 DT?
0. You
Zero.
start the same day and you exit the same day.
Okay, so I guess you just let it expire here.
Well,
Right?
what I would do is I would sell it at the end of the day. So at 4:30 or not 3:30, excuse me. 3:30.
Okay.
I have a question. Can we go over an example where we have the wings like um the iron condor where pretty much we do the adjustment.
Yeah, the Iron Condor is similar in a way that it's a good monthly income. And what you're again relying on is the theta decay. So it's in a similar family. However, the Iron Condor, the one thing about that is there is a little bit more risk, and about equal amount of reward, but a lot more risk with it because the wings are typically further out, um, and the shorts are also further out. So the credit that you collect with the Iron Condor is typically less than with the at the money shorts with a butterfly trade. So the risk to reward is better with a butterfly compared to a condor. I'm not sure if that was your question or not.
I think the question was, how does the adjustment work?
Oh, okay. Right.
Is that correct, Jay? Am I correct?
Yes, correct.
Okay. So the way you would adjust this trade, let's say, for example, you wanted to adjust this trade. You notice that the underlying is below, outside the tent. So the way you would do that is you would implement what is sometimes called a double butterfly, or another way of saying it is you would condorize the this strategy. So the way you would do that is because the put side is in trouble, you would work in this space where the put is. In particular, the contract that's giving you trouble is the 5105 put. So what you want to do is to modify or adjust that, you would buy that back. And the way you buy that back in this an option in Net Explorer is that you put a 1 here, and that would be a positive 1 being you're buying that contract 5105. And then what you would want to do is you would want to move the put side further out. So you would put in a -2 here. So you notice that, if you had a 5090 and you sold two 5090s, net you would get a -2 or a -1. You would get -1. So, and then you would put in a long at 5075. And so now you see superimposed the before and after. So here's, for example, the butterfly, which is here. You can see it's in blue. That was the original trade. And then after I made these adjustments in the model column, you see what the net would be. This is called condorizing the butterfly trade. So you'll notice that this green silhouette here is basically a condor. Is that making sense?
Yeah, kind of, yeah.
So when you commit this trade, this is called the adjustment. And so what you've done is you've gotten more area inside the tent for the underlying to move around in and still get a profit. So if we were to advance this on time, for example, the next 5 minutes, let's say we wanted to go all the way out. Well, that was it. That was the end of the day. So that's the way you would do it. Let's see.
How do you pick what strike price to condorize it to? Like how would you know how far out you'd put it?
What you would do is it's kind of like a double. Let's go back in time. Okay, so here's the original butterfly. So what you would want to do is you would want the same wing size. So what you would do is, in this case, the wing size is, what do we say, 15? Yeah, 15. So what you would do is, this is the put, 5105 is really getting you into trouble. So this, you would want to sell this one back, and you would want to move the entire put side the same wing width that you had originally. And so what I didn't explain earlier is the wing size is dependent upon the implied volatility of that day and the expected move. So that's something that we have to put into the software, how we select the wing size. And we talked about that last time, but we can talk about it again if we want to go over that.
That's a very important detail. So I guess it'd be the implied volatility of what exactly? Of the at the money call, I guess.
Right. Yes. So at 10 o'clock, if we go back to 10 o'clock, when we started this trade, let's see what the implied volatility is for the call, at the money call. Because this determines the wing size. It just takes a minute to load. Okay, so the at the money call implied volatility is about 9.89%. So that would be used in this calculation in the spreadsheet. The expected move would be the price of that particular underlying times the IV in percent. So that would be not, instead of 30, it would be 9.89, whatever I said, times the square root of, the number of days, square root of the number of days. In this case, it would be 1 over 365. So that would be how we calculate the expected move for the day. And that's based on the implied volatility.
That makes a lot of sense. That's a very important piece of information.
Right. Yeah. So like 9% is pretty low, actually. I mean, well, it's in the mid range. I've seen it as low as 6, but 18 or 20 is just, really high implied volatility, but it happens. So that would make what you're doing there is you're making your wings further out and you make the area of this tent bigger. I mean, your total profit would be less, but your probability of success at having a winning trade is increasing. So
I wonder actually, as a side note, that expected move calculation that you have there, I wonder if we could actually even use that in our other algorithm, our Iron Condor or Martingale. Like I feel like that little piece of information could significantly improve that algorithm actually.
yeah, like for example, like this last week, like the last 2 days of trading, I don't know if people have noticed that I mean the market barely moved the last 2 days. So the IV was very, very low. So these were ideal days of trading for income strategies like this. This is awesome. Um, because it's increased probability of success. Now, the only problem with the IV is too low is that the price of the options, it becomes too low. When you're really making money off of the at the money options that you're selling, compared to the wings, which you have to pay for. So the shorts give you money, and the longs you have to pay for. So that difference is your net credit, and that's your profit from this trade. So that's how that works.
How do you know when to adjust?
Well, so when I've adjusted in this, what I'm suggesting is we make an adjustment after 10% loss, at a 10% loss, or if the underlying pierces the either one of the shorts. The shorts, of course, are here, represented here, that, if the underlying, which is this red dot, gets beyond these shorts or the tent.
And so when you make the adjustments, you have to actually watch the trade, right?
Right. That's
Okay.
right.
And
That's right.
so by automating it, it would make it a lot easier. You wouldn't have to watch it.
That's right. That's right. I mean, it is a pain in the ass to watch
Yep.
this. So that's why I think the bot would be great. that would be a pleasure not to have to watch this thing. So as I mentioned earlier, I've made out of the 114 trades, I've had to do 67 adjustments. So it's what ideally I love the P&L of this. I love the returns. One thing I'm not enamored with is the number of adjustments. Maybe there's ways to reduce that. But if the bot can do it, then that's fine too. But every time you make an adjustment on it, it does cost you. It does take away some of your profit. So, all right. Well, that was it. Unless any other questions?
Yes, how often can the algorithm check all this stuff? How often does it? Every minute or more often?
We can check it every second if we want to.
Every second.
If we want to. I don't feel like that's necessary in this case, but if we want to, we can definitely do that.
So what's the typical period?
I wouldn't say there's any typical period. It really depends on the algorithm and what they're doing. In this case, I don't think anything will move enough to justify something that's like less than a second. I think if we're looking at it every 1 minute, and if it's past the tent, in that 1 minute, then we can make the adjustment. I personally, unless Kevin, you think otherwise, but I feel like doing this in a 1 minute frequency would be very doable.
Yeah. After looking at the 114 trades, I've used this simulator OptionNet Explorer, and it only has 5-minute increments, and I think
so we can do it
that's
every 5 minutes. Maybe
I think that's fine.
Sorry, I'm just thinking out loud. Maybe what we do for our back test is we do it every like 20 minutes or something, just because then we can back test it faster and we can develop the algorithm quicker.
Okay, and then
Awesome.
well,
Do you think
and then
that's
when you,
good enough or no?
20 minutes is a lot of time. I mean, sometimes you're in the trade for like 2 hours, so 20 minutes is.
Okay, so
It
5
depends
minutes.
on the day. Like this was a very slow day. I mean, the price hardly moved at all. And so we were in this trade for quite a long time. You could be in this trade all day on this particular day, but there are other days that, it's just 2 hours, you're in and out. That's all it takes. So I wouldn't go too high. I would, I was comfortable with the 5 minutes, but
Okay, so we'll do 5 minutes. I guess if we're trading in real life, we could even adjust that to be down to 1 minute. But I'm thinking 5 minutes, it'll just make the back test run faster, so we can get
yeah.
and improve it quicker.
And
Right,
also,
right.
do you always trade the same security, or do you change up sometimes?
Yeah, there's a lot of meat to that. Some people trade RUT, which is the
Russell.
Russell, for example. And the reason why they do that is the Russell might be less volatile than the SPX. But the good thing about the SPX is it has tax advantages, and it's very liquid. So the Russell is less volatile, which is conducive to income strategy trades, but it's not as liquid, and it doesn't have any tax advantages. So, but we could. I don't know if we can trade those two, the Russell. I don't know if we can still with LumiBot, right?
I remember we had an issue getting data for it. I'm sure we can figure it out. I
Yeah.
wouldn't be too concerned about that. I feel like this would be interesting too to do like you could do like international equities. You could also do, things like TLT, which is like bonds. I feel like that'd be pretty interesting. Like what if this strategy wasn't just on the SPX? What if you're doing this on SPX, the Qs, maybe like, I don't know, Chinese stock market, something like uncorrelated with the US markets, and maybe like bonds. We could actually do this with several different instruments at once to even further reduce the risk of it, you know?
Right. Yeah.
Very interesting.
Again, it's just the property of options trading is that the theta decay is something that you want to gain that income. So you recall that initially you buy the option earlier in the day, and as the theta decays, you get to keep that in your pocket because you're going to end up you're selling it to open, but then you're to close, you have to buy it back to close. So that difference is the money that you pocket. All right.
Awesome.
Let me stop sharing.
Cool. That's awesome. Honestly, ever since you presented this thing, it's been on my mind the whole time. I've been thinking about two things this week. It's my new baby and this algorithm. You know?
Oh, no. Well, your baby comes first, man.
Yeah, of course, but not gonna lie, when you start talking about 400% a year returns, I mean it's pretty hard to not think about that. I mean, that is some pretty heavy hitting stuff.
Well, the one thing I didn't trade every day because I didn't have in the OptionNet Explorer, they don't have the every day, right? They only have the weeklies in there. So it's
Yeah,
possible.
Robert, baby come first. Now the baby already came. Let's build the wall.
Yeah, I'm down. Let's do it. Sorry, I'm just running back here. So Paul, by the way, I just added you to GitHub. I sent you the link to the strategies folder. And Paul, when you go in there, you should see that you got an invite. You just have to accept the invite to see all this stuff. If you
Okay.
see what's there, it's like eight or 10 different strategies in there for now. We're gonna add more.
Okay, good. Thank you.
Cool, no problem. Or sorry, I mean Paul De La Rosa, another Paul.
Thanks.
Yeah.
I got it too. Thanks.
Awesome, no problem. Cool. Okay. All right. Well, I'm definitely very excited to build this thing. I feel like I have to ask because every week we do this. Is there anything else that anyone else would like to build this week? Is there any other strategies you guys or have a burning desire to do? Just to be democratic here.
No,
My
keep
vote
this
is
one. Keep this
yeah.
one priority.
Yeah, right. No
I
other strategies.
I
Let's,
think
Yeah.
we
let's go
owe
with
it
that
to
one.
ourselves to finish this up.
Yeah, I think so too. I think so too. I agree with you guys completely. I'm just putting it out there. You know, I want to be democratic about it. It's like for me, I'm like, well, this is kind of crazy, but all right, cool. So why don't we do this? Why don't we take a quick break? I'm gonna go get some water, use a bathroom, whatever. You guys can do the same, and then we'll come back and we'll continue working on this. I think last week we got to the point that the butterfly is working. We don't have that implied volatility thing, so I'm glad that you brought that up because that's something that I was not aware of. So we'll have to get that implied volatility in order to build that butterfly, and then we'll have to add in that adjustment mechanism, right? And then while it's fresh in my mind, I'm also going to change the sleep time to be every 5 minutes, just so that our back tests run a bit faster.
Can
Right.
you do a quick review, please, when we come back of what you did before, so kind of we come up to speed?
Oh yeah, I mean, I feel like I'm gonna naturally do that because I need to refresh my own memory too. So
Okay, cool.
we'll definitely
Cool.
go over that. Yeah.
Thanks.
That sounds good. Cool. Awesome. All right, guys. So I'll see you back in what, 5-10 minutes. Grab some water, use a bathroom, whatever, and then we'll get back here and let's build this thing. I'm very much looking forward to this personally, you know. Okay, see you guys in a bit. All right. Hey guys. Is everybody back? You guys all good? Let's start working on this thing. Let me share my screen here. Okay. All right, so I think this is the code here. Let's review everything. I'm gonna delete this because I just realized this is the wrong thing here. Or no, wait, I'm actually looking at the wrong strategy. Yeah, so for those of you guys looking for this thing, we're calling this options butterfly condor. I think it's an appropriate name. Maybe we could rename it later on or something, but I feel like this is pretty descriptive. We had the parameters. The symbol that we're trading, we're trading in this case SPY. The reason why, so I know Kevin, you did this on the SPX. I think in real life we'd want to do this on SPX. The problem is that we don't have the data on SPX price. So we'll just do it on the SPY for now, and then we could switch over to SPX later on. I don't think that would be a big deal. We have the days to expiry for the options. We set to 0. The strike step size, that's basically just a calculation thing. I don't even know if we need that. The minimum wing size is 2. And then I guess, Kevin, we adjust this based off of that expected value, or is the wing size stay the same?
The expected value is calculated based on IV for that day of the at the money call.
Right, but I mean
It
the
does
wing
vary a
size.
little bit. Yeah.
So the wing size is using that, right? Using that IV, right?
Right. Yep.
Okay.
So the minimum wing size is that if the volatility is very low, I don't think something less than 2 would make sense.
That makes sense. And then if the IV is very high, we're going to put the wing size bigger, right?
Bigger. Yeah, so that's right. Yep.
Okay, cool. That makes sense actually now. That I feel like that's something I didn't understand the last week when we did this. Time to start, the time to start trading. We set this to none because down here we started working on a back test where we'll be able to actually test the different times to start. So we set to 10 and 10:30, right? Those are 2 things that we could test out. We have a maximum loss. So this is like after we've made that loss, that's when we make the adjustment. Take before, I'll even say before adjusting to a condor, right? Because that's what it is, right? You said, I think you even said 18 today, no?
No, so max loss would be 20%. We want to get out of the trade. The loss before an adjustment, I guess right now you're calling it first adjustment loss is 10%.
Oh, right. Yeah.
Yeah.
Okay. First adjustment loss, that's 10%. But you're talking about a different number today. You're talking about like 20 or something, right?
Yeah, no, it's the same. I make an adjustment when I have a 10% loss.
Okay.
And then if even after the adjustment, I'm still losing money, I just get out of the trade
Okay.
at 20%. Yeah.
Okay. So if I lost 20%, we just forget about it. We just sell everything and leave.
Yeah, and just trade tomorrow.
Okay.
The same thing. Rinse and repeat.
That makes sense. Okay. And then we take profit at 20%. So if we make 20%, we take that profit.
Yeah.
Yeah.
A refinement would be, in a special situation, do you let it run? But we can discuss that later.
Okay. Yeah, we can kind of look at the data and judge based off of that. My gut says that we probably want to do it a little higher because it's a 0 DTE and maybe you run till the end of the day. But whatever. We'll let the data dictate that, right?
Yeah.
Okay.
Since this was back tested with weeklies, should we have a number of days till expiration variable?
Well, we have a days to expiration variable, but that would be a different thing, right? Because it's a 0 DTE, right? So I guess weeklies, they expire what, Friday?
Yeah.
Yeah. So what we could do is we could maybe say something like trading days to trade, or we could say days since last trade or something, because it's not really a days to expire. It's not a DTE, right? Because it's zero DTE, right? But we want to that's a different thing on top of the DTE, right? What can we call that? That's actually a very good point. I think you're right, because what I'd like to do is I'd like to first of all just replicate what you have, Kevin, right? Because what you have makes 400% a year. It made 400% past year. Let's just first replicate that, right? And then let's see if we can even improve on that, right?
Right.
Because maybe if this thing trades every day, it could do even better, right?
Right.
Yeah.
It
Well, they're
could
going
be.
to definitely perform differently. That's for sure. And it might be worse if there might be a greater risk for loss if it's expiring that particular day.
You're right. Yeah, I definitely agree with you on that. Like, and I can actually think of one specific example when that would be the case, because when we were doing the Iron Condor martingale thing, when that when like a bad period hits and like markets go kind of crazy, it usually lasts a couple days. It doesn't last like weeks on end, right? Usually it's like things blow up, there's some crazy new piece of news, COVID happened, raising interest rates, whatever. Market blows up for like 3-4 days, tries to figure out what's going on, and then goes back to normal, or at least like relative normal, right?
True. Yeah.
Right. So I definitely agree with you on that. I think that's a quite an important factor. Um, so what would we call that, and how would we want to adjust that? Because I can think of two ways. I can think of you could say days of the week to trade, like Monday, Tuesday, Wednesday, Thursday, Friday. We could do something like that. If it's one of those days, we trade it, yes or no. Or we could do something like days since last trade, right? So if it's been more than 7 days, then we put something on, right? We can kind of do both of those. What do you guys think would make more sense?
Maybe we should just use only Friday expiries like he did in the back test.
No, I actually traded. I may have misspoke. I traded 3 times a week. So Monday, Wednesday, Friday, but not Tuesday and Thursday, because I didn't have the option price data in the software. I'm
What
assuming Polygon will have that in there.
what did you do on a holiday? Let's say if Friday was a holiday or Monday was a holiday.
Well, yeah, the software let me know automatically. That wasn't a trading day.
So you just skipped it.
Yeah, have to skip. When the market's closed, you have to skip it. Yeah.
Okay,
Yeah.
so it's not like you did on Thursday instead. You just skipped that day.
Yeah. Yeah.
So why don't we make a variable of something like days of week to trade or something like that?
Oh, so these were zero DTEs.
Yeah,
Right,
they're all zero. Yeah, there's no overnight risk in this trade. You start the initial trade at 10 in the morning, and then you close it by the end of the day, a half hour before close.
Okay.
Yeah.
But your program didn't have data for Tuesdays and Thursdays, is what you're saying?
Yeah. Yeah.
Okay. So we can run this every day. We might even get more chances to trade that way. That's okay. All right.
Well, in theory, it's more bites of the apple. Sometimes you get a bad spot in the apple, so.
True. But with compounding, I think more trades might be better.
Yes, compounding, definitely. Right.
I mean, I could see it going both ways. I mean, the compounding could make it better, but the risk, right, that there's a couple days in a row that it blows up is higher.
So statistically, I guess statistically, the more frequency gets you closer to expected value. So whatever the expected value for this trade is, if you do more frequent trading, you approach to that. So basically, that's what it is.
Well, the other thing about this is it is somewhat tolerant to direction. I mean, because this is a butterfly, so if it goes up or down, you make money. So if the thing that we're trying to adjust for is in periods of high volatility, we're making our wings wider to try to adjust for that. But the thing that could happen, which Robert's saying, is we could have multiple losses in a row, in a string, for example. Let's say the market is going up fast or going down fast. Is there like a cooling off period that says, okay, we've lost money in the last 3 trades, maybe we need to take a break for the, like the market to come back to its senses. The elephant gets tired after a while, and it kind of gets, reverts back to the mean. I think that's what, Robert, you were referring to.
Yeah, basically, right? Just I say this because of our other algorithm, the Condor Martingale. I know that there's periods in time, for example, 2022, what was it, March 2022, when they started raising rates, there was just like 3-4 days in a row that were just terrible when it comes to the Condors, just because the market went wild, right? Powell comes on TV and says, we're going to start raising interest rates. First day bad. Second day, people are now starting to think it's even worse, right? Because now he's saying, oh, this might happen even longer. And like every single day was just successively worse information for like 4 days in a row, right? So that I'm thinking about, that string of bad days could be quite damaging. Although, you know what, though, this is actually better than the Martingale, because the Martingale, you have to double up, and so like it explodes basically. But in this case, you don't really have the same risk. So maybe that doesn't matter as much. So I don't know. I feel like it'd be interesting to test. We could just test it out. Right?
The other good thing about the butterfly is you don't lose as much money as you do with the Condor.
Yeah.
Because your wings are not as wide. So that helps.
Absolutely. Yeah, I mean, when you showed that graph, it was a very stable up graph. It's not only the fact that it made 400% in a year, but it's the fact that it's so stable, right? Like
Right.
that's really impressive,
The drawdowns aren't as bad.
Yeah. Absolutely.
I
Okay,
mean,
cool.
I basically cut the losses at 20%. So, I didn't, because you could lose a lot more than 20% in the Condor if you don't manage the trade.
Yeah, but we're also, it's 20%, but it's we're not trading the whole account, which is actually the next thing. We're trading, in this case, what was it, 10% you're doing of here that we're testing?
Right. That's another built-in risk strategies. Because you have to have margin when you place this trade. You get the credit, but you also have enough margin in your buying power in your account in order, in case the trade goes bad, you have that money reserved. And so we tried to keep it to like 10% of your account so that you never trade too big.
Yeah.
That's another risk mitigation strategy.
Yeah, I think that's really important. So if you think about that, if the max loss is 20%, is it 20% on your whole account, or is it just 20% on the trade? Right?
20% on the trade. So the
So
account,
20%.
it's 20% of your account you're using to commit to this trade, but you're only losing 20% of that.
Right. So max loss for your entire account is only 2% in a day.
Yeah, that's what you want.
So
Yeah.
that's extremely reasonable. That is not a bad loss at all. That is, that happens very, very often in the market normally, if you just bought the S&P by itself. Okay, so we got the take profit percent, 20%. We got the percent to trade, which we just talked about, 10%, 15%. We could also try that out. Time to close. So at 3:30, regardless of what happens, we close the trade.
Yeah.
That sounds like something we could play around with a bit too. Again, my gut's thinking if we held it to expiry. Have you tried that, by the way? Just holding it till expiry? Did you play with that?
No, I don't want to get assignment with this. I don't want to be assigned these shares for any reason.
Well, I mean, on the SPX, you don't get assigned. You get the cash settlement.
Yeah. Well, if you trade different instruments like SPY, for example, you could get assigned.
Right. Yeah, definitely. but on SPX, it'd be a cash assignment, right? So,
Yeah.
or cash settlement. I wonder how that would happen, right? Our back testing engine set up to by default do cash settlement or cash, cash settlement. I wonder if that's better. I mean, the reason why I say this is because remember we tried this on the Condors, and there was actually a very big difference between selling it at close versus letting it cash settle. You don't think it is, but when we actually back tested it, it created a pretty big performance difference, right? So I'm wondering if that maybe would be worthwhile, right, to explore.
Yeah.
Yeah, I think for S&P, let it expire. Just you don't get assigned for that, and the theta decay is a lot faster at the end.
Yeah, the last like 5-10 minutes of the day have huge theta decay.
Yeah.
Okay. Either way, so just food for thought. We can right now. I'm just trying to copy what you're doing, but we can, these are things that we can test out to see if we can improve it further, right?
Well, the other reason for 1530 is the algos start to take over, and there could be market swings. I've lost profit many times because the algos just took over, and they started either buying or selling, and it just ruined the trade. But that's just me.
Yeah, that makes sense. I mean, the last 30 minutes of the day tend to move quite a bit. I think even in the past week, we had like this wild swing in the last 30 minutes. Forget what day that
Yeah,
was.
it doesn't happen every day, but when it does, it can be quite brutal.
Yeah, that makes sense. Yeah, I feel like the middle of the day, actually not even I feel like I've seen stats on this before. Middle of the day, not much happens. First 30 minutes, last 30 minutes of the day is like where most of the action happens in the market.
Yeah. The smart money closes the market, the dumb money opens the market.
So
Yeah.
let me try to understand. So basically, anytime you get to 20%, you close the trade, right?
Yeah.
Right. Okay. All right. I got it.
Yeah.
Thanks.
So either 20% or hitting the 330 mark. Okay, cool. So those are parameters. So I feel like that's good to go. We have this here. I'm gonna skip over what we have initialized. We set up the actual trading iteration, underlying price, add line, Okay, so I guess let's start building this thing out here. I'm trying to remember what exactly we had in the code. We had all of the different inputs. We have the underlying price. We check if we got the price. We add lines to the chart. We get the date. Convert to New York time. Okay. Check if it's time to close the trade. So this is the closing of the trade. Check if we should be stopped for today. I think we only want to enter one trade for the day, or do we want to do multiple trades? So let's say we entered one, we took a profit. Would we want to go again?
Well, yeah, at that point, you're not capturing a lot of the theta decay at that point. I mean, it's better to start in the beginning of the day and then move forward to the end of the day. You get more of that theta decay. And I wanted to make it 0 DTE, so we don't have any overnight risk, and we have as the maximum theta decay as possible. After 10 o'clock, I think the market kind of is deciding what directions it's going to go into, up, down, or sideways. So I think that at that point, it's a good time to determine what your at the money strike is.
Right. That makes sense. Okay. But still, my question still stands though. So I guess we just wouldn't do a second trade. Like we went through one trade, we had our stop loss or we got a profit, and we'll just call it a day.
Yeah.
That's correct?
Yep.
Okay.
I mean, the other way you could do it is, make that the time that you initiate the trade a variable, and I mean, that's another way to explore it as well. I've heard some people do butterflies at noon. And that's when they initiate their trade. So,
Well, I think we already have that, no? Time to start is that variable, no?
oh yeah, right. You have, well, we have 10 and, well, okay. We have 10 and 10:30 in that, but we
Yeah,
also
but
explore other things. Yeah.
Yeah, exactly. So
Yeah.
when we run this back test right now, it's just gonna be 10, right? The
Yeah.
10 and 30 is separate back tests.
Yeah, got you. Right.
So that way you like I've set it up right now so that you could take this code and actually start like trying the different variables, right?
Yep. Yep.
Set up in that
Okay.
fashion.
So yeah, we could play with that. That's a good thought.
Yeah. Okay. All right. So we check if we should stop. So I'm going to keep that in here because that sounds valuable. Okay. Check if it's time to create the butterfly. So we check that time. Get the portfolio value. So we want to get the portfolio value. That is going to determine the size of our trade, which is why we want to get it. If we already created a butterfly today, then return. This again is protecting us so we don't do more than one. Check if we hit the max loss. So there's our exit. Okay. Check if we hit the take profit. Okay. And then for now, set the wing size to be the maximum minimum wing size. Calculate the portfolio value to risk. Set the quantity to trade. Get the expiry date. Get the nearest strike to underlying price. Get the asset. Get the price. Okay, so it sounds like we have this thing working. Let me run this thing just to see what happens. And let's do, and what period did you backtest over? What was the dates?
Oh, January 23 until February of 24.
Okay, so we'll do January 23, January 1st, 23.
Well, actually, the second. I'm sorry. Right.
Okay. So January 2nd, and let's maybe make it like, say 5 days or something. So we can now compare it against what you're doing, right?
That would be 24, not 23.
No, I want to do just 5 days at first.
Oh, 5 days. Okay,
Yeah, just
sorry.
5 days at first, just so we can like, because then it's quick and we can see the result really quickly.
Makes sense. Perfect. Got you.
Then we'll expand the timeline later, right?
Absolutely.
Yeah, because you already know what's going to happen. We could just match up those 5 days and then we expand out the timeline and we can, because it takes a while to backtest, right? So.
Right, exactly. Yep.
Cool. Awesome. All right, so this thing's starting up. Okay, so we have this thing, creates the butterfly. Do the wing size. So I guess one thing that we don't have right now is that implied volatility calculation, right? We just have wing size to be min wing size. We don't actually use the implied vol. So that's one really easy thing that we can add in right now. So we need to get the Greeks. Of the call, we can just call it the call, right? The call at the money. Yeah, this is AI just making things up here. Let's say, we'll get the, let's say get the Greeks. It's expiring. And I guess they're already at the money, right? Like this is
Yeah. The shorts are at the money, yep. The put and the call short are at the money.
right. So where do we create that again? This is max loss, da, da, da. So here's the asset. Get the price. So actually move this down here. Wing size. Get the quant. Oh, so that's Okay, so here's that quick back test. Let's see what the trades look like. Because obviously there's not this actual strategy. I want to see the trades. Did I place the trades? Did it show the trades? Tear sheet. For some reason, it doesn't show the trades. It's not showing the trades. Maybe I need to lengthen the back test a little bit. So I only did 5 days. Let's do, say, like 8 days or something. We'll rerun that. Okay, but there's get put orders. So there's create butterfly, create the asset. This is the asset. So we need to get the wing size here. So funny thing is that we get the, so I guess we have to move this down here because quantity. Okay, so move quantity down. So I need that till later. Because wing size, we're not going to know until after here. So I'll move here, we'll move the wing size calculation down as well. We'll add this IV thing. Get the Greeks for the option. Yeah, there's a call, there's an at the money call. We're just checking to see if that's all good for the option. So I'll get Greeks, I think that's right. Yeah, get Greeks asset price, none. I don't know if we need to actually pass that in. I think this should be okay. We get the Greeks. I forget how exactly we pull that out. I think it's get the implied volatility. I think it's something like that. And then calculate the wing size base. Yeah, for some reason it's not printing out trades. I don't understand what's happening here. Oh. I don't understand why things not printing out trades. Let me hit install upgrade when we bought. Just in case we had some sort of bug in there. So to calculate the wing size, how do we do this again? So we go, what was that formula?
Yeah, I can post it in the chat quick. That might be easier. Let me get to that. It's a pretty simple formula, but it's the pictures worth 1,000 words. Yeah.
I think this is it. This looks like it. So underlying price times implied volatility times days to expiry divided by 365 times 0.0 to the power of 0.05. The power of half? Why is that doing?
Well, it's the square root of 1 over 365.
Yeah, that makes sense. So power of a half is the basic square root. I think, right?
Well, yeah, it's days to expiry is 0. That right now the days to expiry is 0.
Right.
That would be 0. That would make the expected move 0.
Yeah, that make everything 0.
I would put 1 instead of days of expiry. I would put 1.
So, well, we want to be able to adjust this thing. So I guess we go days to expiry plus 1, right, to make it more generic.
Mm,
So it's 0, right? Then now,
okay. Okay. Yep. Yep.
just so that if we ever want, someone want to modify this thing and put, what about days to expiry 1 or days to expiry 2 or something like that, right? Or we could
Yeah.
even
Right.
min 1 days to expiry 1. I don't know what's more appropriate.
The other good thing about this, I mean, code is you could do this on a weekly basis or every 2 weeks or even on a monthly basis.
Right.
And this would work also.
Yeah, I think you're right about that.
So I mean, you're making the code reusable by doing it this way.
Yeah, exactly. Yeah. It's more reusable and like it allows to do more things, right? Because
More
if
things.
this
Yeah.
general mechanism works, right, then maybe we could do this on other assets. Maybe we could do this with different DTEs. Maybe we could do this on different days of the week. Like there's so many different ways to try this out, right?
Yeah. Yeah.
I can imagine there's maybe, you went through this and there's probably something that's even more optimal than what you did, right? If
Right.
you think about
I would say so. Yeah.
it, right? It's
That's
like, what's the chance that you got the perfect thing, the first time you went through it, right?
probably
Well,
0.
yeah. So I'm willing to bet maybe there's some sort of modification to this that makes like 1,000% a year or something. I don't know, right? Like, who
Well,
knows?
yeah, that's
Yeah,
possible. Why
yeah,
not?
maybe, right? Who knows? Okay, but it's 100 times.
Well, I'm sorry, that the 100 is the underlying.
Oh, that's underlying. Okay, so underlying price
Right.
times applied volatility. So I guess that's assuming it's a percentage, which I think we do get it back as a percentage. Because you have like a 9, whatever. I think we get back 0.09. We'll see in a second.
It
And then
depends on what you get. You might have to divide by 100 depending about what you get. Right.
yeah, exactly. We'll see that in a second. I don't even know if this is getting it correctly. And then days expiry plus 1. And then to the power of a half is a square root, right?
Yeah.
Yeah, okay. I'm forgetting basic math. I haven't done this for a while. Okay, cool. So we got that. So that's the expected move. And then how do you use that expected move to figure out your wing size?
Well, you multiply it by, let's see, let me look at my Excel sheet. So I use this Excel sheet to calculate the expected move. I'm looking at it now.
So the expected move comes back as a dollar amount, or is it a percentage?
Yeah, so it comes back as a dollar amount. That's exactly right. Yep.
So then what we
So
want to do is round it, right?
you round it and then you would add that to the at the money
Right.
call or put.
So
So
there
you
would
would
be
add it to the at the money for the call long, and then you subtract it from the at the money for the put long. Does that make sense? And that would be your wings.
yeah, I think it looks something like this, right? Right, you get your expected move, and then
Right.
you round your expected move using a strike step size. So in this case, it's a dollar for SPY. So you round it to nearest dollar, and then you get the minimum. No, you get the maximum of the min wing size or the expected move, rounded
Yeah.
expected move. Okay. Okay, cool. That makes sense.
Yep.
Okay, so we added now that thing in. Okay. So now let's run this in debug mode. Let's see how this does.
I would be interested to see how it reports implied volatility as a percentage or
Yeah,
what.
yeah, that's definitely very important. I think it's as a percentage, if I remember correctly. Okay, so we're here. get Greeks. Here's our Greeks. Theta Vega.
Oh, there it is.
500. What? That doesn't sound.
No, that's no.
Yeah, there's definitely something wrong with that. Underlying price is 381. Delta is 0.5. Let me look into this. What the heck is this thing talking about? 382 call. Multiply precision. Strike. Expiration date. Yeah, it's a 0 DTE because that's the actual date today. And then the underlying price is 381. The expiry is strike is 382. The Greeks asked that. What am I missing here? 500. That sounds way off. Gamma is infinite. Theta is infinite. Option
Yeah.
price.
Something's not right. This is not reporting. This is bogus data.
Yeah, this is not right. You know what I'm gonna do? I'm gonna run this in Lumibot so I could actually see what is going on here. So we're gonna go into we'll call this because I want to actually look at our function. Maybe it's getting confused because it's 0 DTE. Maybe we have to actually even change the way that we're calculating this. Options, butterfly, condor, fly.
It could be that Polygon is not calculating the IV for you. I know brokers do that.
We calculate our IV. We calculate it. So it might be something screwy with our calculation.
Oh, okay.
Right? Like that sounds very possible. So let's put it to here. This up
But
here.
you know, the theta, the gamma, the vega, it should be in Polygon, right? It should be. They're
Yeah,
not calculated.
Polygon does have that.
Okay.
I'm pretty sure they do have Greeks. I don't know if they're historical Greeks. I'm not sure if they have it or not. But in either case, we can calculate that, right? We have a calculator that calculates Greeks. So I want to see what we're doing, and maybe we need to modify our function a little bit to do that. Because we're using Black-Scholes for it, which I think is standard, right?
Yeah.
But maybe something about the 0 DTE is making it break down a little. Because it might be like rounding to the day, because some of those values were infinite, right? Which makes me think that it's not doing things properly at the 0 DTE level. Back, I didn't jump into it.
Divide by 0 encountered.
Yeah. There's something funky going on here. So get Greeks. Where is that? It's Greeks. I'm gonna run this in my development environment. And continue. We'll find our get Greeks function. Def get Greeks. I think it's just get Greeks is probably just doing it by the day. So I think we just have to update our function here. So this is, I don't think we've ever tried getting Greeks on 0DTE options.
I think for the iron condors, we got deltas, right? On a daily basis. We got deltas.
Yeah, but those are 1 DTE. That wasn't 0 DTE.
Oh, that's right. You're right. Yep.
Here, this is where's credentials. Credentials. Change this up. Back testing true. This is my development environment, so things are a little different here. Why is backtesting start missing? I can find the other one. What the heck was it here? Backtesting start, let's end. Okay. Why am I not copying the exact thing? There's some stupid thing where it's moving things around. I need to fix that on my computer. All right, I just need to change something on my computer. This is starting to really frustrate me because this is I have this thing set up on my computer where or on my VS Code where whenever I save, it modifies the file. But that normally would work well, but I don't know what I'm using and I need to investigate this. It's lately when I save stuff, it like deletes lines of code and things like that. So I
Oh,
feel
wow.
like I need to change that. I'm gonna remove this. I will save, format on save.
What formatter are you using?
I don't actually know. I need to look
If
into it.
if you click on the left on your plugins, what plugins do you have installed? Your extensions?
I have a lot. I have quite a few. I think Pylance. I have a feeling it's Pylance.
It's got to be something like that.
Yeah. So format on save. By the way, edit format on save. I'm just gonna turn off for now. And I'll circle back and figure out what the heck is wrong with this thing. Because it was working fine for a long time, and then now it's just whenever I do that, it spazzes out. I think it's just like an outdated plugin or something. Let's run this thing here. And then we get Greeks. Okay, so here we are. So there's get Greeks. Going through here. Here's the calculation that it does. So it goes in and says, okay, if asset type not option, okay, so option price. We get the option price. Is that correct? That is correct. $1.36. That sounds about right. We go into here, Greeks. Price is here. So if I take a step back, price $1.36. Okay, so that's correct so far. The auction price, and I guess then we use the risk-free rate, which should be like 5%, right? 5.2%. Although that is today's risk-free rate. We really should be using a risk-free rate from the time of this thing. That's something that we can correct here, I think. That is definitely not the right calculation, but it's okay. We'll get back to that. And then we get the underlying price of the stock. Okay. 381, that's correct. And then there's this broker.getGreeks. That's the one that does all the magic here. Okay, so it's query Greeks. Calculate Greeks. So there's a query and then it does a calculate. So here, query Greeks. Okay, so it's not doing, now it's just doing calculate Greeks. Okay. So we want to figure out calculate Greeks. Def calculate Greeks. We'll jump into here. Yeah, there's this Black-Scholes package that we're using. Okay, so if it's a call, uses Black-Scholes.bs, underlying price, strike price, interest rate, that can be fixed. I think that's even a bug, actually. Days expiration, 0. I think that's the issue here. And call price, that's everything is good there. And then let's jump into this. Let's see if we could see. This is the way that they're doing it. This is not our package. We're using a Python package from PyPy. Underlying price, dates to expiration. So maybe dates to expiration, I think it shouldn't be 0. It should be like using the actual time left. I think that will fix it because there's nothing I see here that's implying that can't happen. It can't, like, it could just be some fraction. I think because we're giving 0 as a DTE, that's the problem. So
So you think that's a time, like not in days, but in hours, minutes, seconds, or what do you mean?
yeah, that should be like, it shouldn't be 0. It should be like 0.1 or something, or 0.2 or 0.3. It should be like a fraction, right? The 0 is going to just screw up a bunch of calculations, right? 0 blows up all sorts of stuff, right?
Oh, yeah.
Basically, the number of hours that will remain for the trading in the day, right? That divided by total, right?
Correct.
So if there is 8 hours, and then how many hours you planning to trade this thing, something like that.
Right.
So it shouldn't be 0.1. It should be actually closer to 1 than 0.1, because you're starting
like the whole trading day. Yeah, I agree. Yes. Okay, so let's do that then. So we'll go here. This is calculate Greeks. Let's go back to that calculate Greeks function. This is what we have to fix. We have to fix this days to expiration. So dot days. So expiration minus current. I got to rerun this here. Or at least let's see what it looked like at that point in time. Calculate Greeks. So it's expiration this is a date. Current date is a date. So we're passing in a date here. So I guess current date is the one that we could just do date time. So instead of a date, what if we did that? Instead, get a date time instead of a date. And then yeah, let's just see what happens with that. Because I don't know if we're counting, like I've never had to do Greeks on a zero DTE. Zero DTEs are so new that this is like, you know, there's not a lot of stuff on this. I did my master's and I had tests I had to do on this, but zero DTEs never existed back then. So there's never such a thing as like, how do you calculate this, right? Back then. But the question is, do you do it based off of the hours left in the day itself, or is it hours left in the trading day? Right? Those two things can have fairly different calculations, right?
Yeah. Yeah, the options Greeks go to zero at the end of the day. Like theta goes to zero, for example.
At the end of the day or trading day?
The absolute end of the day, like 4 o'clock, 4 p.m.
Yeah, so trading day.
The trading day, yeah.
Yeah, okay. Okay. So we go here, calculate Greeks, we don't need any of this stuff. We're really just debugging that one thing. Because I think the formula is fine. It is just what we're passing it is a little off. So if we go here, current date, now it has time in it. Now it's an exception. That makes sense because now we're subtracting two different things, date and date time. Okay, so let's figure out how can we do this. Expiration, we'll go, we should say expiration's 4 p.m. We'll convert the expiration to be a date time with a 4 p.m. Eastern New York time. Date time combine expiration min time default, so localize it as time default by DC. This seems somewhat correct. I don't know. AI just does this stuff. I feel like this is probably right. I've never done something like this before, but this sounds about right. And get Greeks, right? So we go in there. There's the calculation. Expiration is now, yeah, now it's 4 p.m. that day. Then days to expiration is still 0. We don't want to do days. Yeah, because this is now right. So the expiration's 16 and the current time is 10. So it's 6, right? So it should be 6. Convert that into.
Yeah, that's 10 a.m. and 4 p.m. Yeah.
Yeah, exactly. That's correct here, right? But now dot days just rounds it down to 0. So we don't want to do dot days anymore. So we'll go calculate the days to expiration, but allow for fraction days. So total seconds. Oh, this makes sense. Okay, so total seconds. So this sounds better. This will be more accurate. So let's
Oh,
run
this
that.
gives seconds? Oh,
Yeah.
total seconds. Okay.
So what's the difference between 2 and total seconds, and then divide it by the amount of hours in a day? Right?
Yeah.
Sounds about right. I don't know if that's exactly how brokers calculate it or not. It'd be interesting to look up how a broker will calculate. How do brokers calculate implied volatility for a 0D DTE option? Actually, and why am I doing this in Google? I feel like I'm like starting to unlearn my Google habit. Like Google is just dumb, you know?
Well, it's got Gemini now.
Gemini is also dumb. Have you seen the images it makes? Like, what is wrong with this thing?
Gemini's actually passing
It was
ChatGPT.
so I don't know if you guys have seen this all over Twitter, but it's like the most woke AI in the world, right? It's like what was it? It was show me what was it? There's a bunch of like weird, crazy questions that I asked it. It's like who killed more people, Adolf Hitler or what was it? Or Mr. Rogers? And it was like, oh, I can't talk about how many people died and da, da, da. It's like there's a very clear answer here. Like it's Adolf Hitler. I mean, like it just like refuses to answer that. It was like, show me a picture of a white woman, and it was like a bunch of black women. It's like you're just not like it's just like the most woke AI in the world. It's like making things. You know what I mean? Like it's just false. You know what I mean? Like, I don't know. Maybe it's smart at other things, but from what I've seen, it's like way off. Like I actually heard like there's people like the guy that used to run Y Combinator, Paul Graham, he was like talking about like they should probably fire Google's CEO because like their stock price has been tanking ever since Gemini came out because it is just not, you know. Because it's like this highly opinionated AI, right? It's like you don't want that. You want something that's like telling you the truth. You don't want something that's like making things up based off of your opinion of what the world should look like, you know? Okay, so gather input variables, use
Kevin, I know we talked about it last week. You do the expected move, at least all the option trading I do the by adding the price of the at the money call option to the at the money put option price, and then I just put something in chat. They take 85% of it. I've never done that, but there's a lot easier way, I guess, to get an expected move that we use in doing spread trades and that type of thing. So I don't know if that helps or not.
Yeah, I think there's alternative ways. I think if we get stuck, we can try that. Yeah, that's a good suggestion.
Yeah, I mean, we can explore that. I think this will work. It's just, you know, this is actually a very good thing to do in general because we're going to be doing other things with 0DTs, and it should be able to get Greeks for that anyways, right? Right now, this feels like a bug to me. The fact that I can't get Greeks for a 0DTE, that feels like a bug to me. Also, Gil, I see you posted something here. Look up the option chain and add the price at the money option, and then at the money put option, then multiply the value by 85% to get the expected move. You can translate the results in percentage terms by dividing them by the stock's current price. Okay, so look up the option chain and add the price of the at the money call option and the at the money put option. then multiply that value by 85. Why 85%, by the way?
I'm not sure with that. I do not use the 85%, and this is trading with guys in the CBOE. They use just the at the money options, put and call price, and add it together, and that gives you your wings. And maybe it's more of an approximation than it is using that. I was interested to see how that formula would work out, because that's probably that's mathematically based, but for quick trying to figure out how to put a spread together, that's what we do. Is we take the put and the call price, add them together. That's the expected move. So your wings become from the at the money up and at the money down as far as the wings that we set up. So seems to work out. I just hate to see all this time in to figure this out. If we can at least get something running and then go back and fix it later.
Yeah, I get what you're saying. That actually makes a lot
Yeah.
of sense. I think this will get that fixed. I'm just kind of seeing if this is the right approach.
Yeah, I'm anxious to see see that 400%.
Yeah.
Yeah, I hear you too, man. I hear you on that. I totally agree
I'm
with you.
not sleeping either after that, and I don't have a baby at home, so
Yep.
I think this will work. I think this seconds approach will work. I'm just wondering if that's the right way to think about it, right? I think it is, right? Because it's the amount of hours left in the day divided by the total amount of hours, or I guess the amount of seconds left in the trading day divided by the amount of seconds in the entire day. That sounds right to me, but I'm just wondering if the divisor is different, right? It's 24 hours, or should it be the amount of hours in the trading day? But I guess that wouldn't make sense. I think it should be the actual number of hours, number of seconds in the entire day. So here, days to expiration is 0.25, right? So does that sound about right? Right, from 10 a.m. to 4, right? It's 6 hours divided by 24 hours. This is about a quarter, so 0.25. That sounds about right, no?
Yeah, what is that? 8 hours, 0.25?
Yeah, 0.25 is
8 hours.
6 hours. 6 hours. Yeah, 10 a.m. to 6, or 10 a.m. to 4. 6 hours, 0.25. That sounds right to me. Let's run this here. Get back to Greeks. Now this is looking right. Implied volatility 36. Still pretty high.
Wow, that is high. What day is that? Is that even?
This is the beginning of the year. This is the 3rd of January, 23.
Hmm.
It's not impossible, but it just sounds a bit high.
It sounds a little high.
Yeah.
Possible.
Hey, sorry, why you think about that? I'm just gonna use the bathroom real quick. Let's go use the bathroom. Be right back.
Yep.
All right, how's it going?
All right. I was looking at Coinbase, the coin. I just that stock. How do you trade that stock? You mentioned you're doing calls. I was like, wow, that thing's
Yeah,
a
they paid off
beast.
very well. Yeah, it has paid off very well. I think it's going to skyrocket personally. I think it's just getting started. Like if you look at past bull runs in the crypto market, this is the beginning of a bull run. This is not like a full bull run. I would expect personally that Bitcoin goes to like 100 to 150K, and I expect Coinbase to go to like $500 a share. That's
Oh,
my
it's at 200 already.
yeah. So I
And
said I
that
think
is
it's getting
since
started.
November.
Yeah.
Crazy.
If you look at past bull runs, this is just the first inning.
Oh boy.
Yeah. I could
It's
be wrong.
interesting. Look how they calculate the expected move. Is just what I posted on the bottom there.
Yeah,
On a
maybe we should do this instead. Because that implied volatility, Kevin, did any guys get a chance to see if that made sense? The 35 implied vol just sounds ridiculous.
That's a lot. Yeah.
I think, the way we calculate it, I mean, when you think about volatility, you're thinking about the volatility during the trading hours. not the whole 24 hours. So maybe the way we did it, we divided by 24 hours. Maybe if you just assume that basically most of the day is your remaining time because you start at the beginning of the trading hours, maybe you get a better number. I don't know how the formula was, but maybe that's the reason. That's the only reason that it might be too high.
It could
be. I can think of.
It
So
could be.
if you divide by like 8 hours or whether the trading hours are 6.5 hours, so maybe 6 hours, whatever
Right.
the remaining hours of the day would be the time that's actually volatility is valid. The rest of the 24 hours, there is no trading.
Yeah, I agree with you. I agree.
Maybe that works. I don't know.
Yeah, I agree with that. Then we'd have to make this divisor different, right? Because this divisor is kind of a generic thing. Like, because now think about if it's like multiple days, right? If it's 10 days, then you kind of need to do 24-hour cycles, right? But on the last day is when it's so unique, right? Yeah, you know what? We can circle back to that. I think doing this expected move, the way that you're saying, Gil, I think is probably the easier thing to just deal with right now.
Yeah.
Instead of trying to reinvent the wheel here, like this is we're going to a rabbit hole, right? Why
Make
don't
a
we?
big, but we'll circle it in tighter as we go.
We can circle back to this, right? For
Yeah.
now, I think you're right that we just do that, right? I think I don't know why times 85%. That seems odd to me, but yeah, I mean, let's try that out. So we'll go. Is there anything that describes why 85%? Well, saying 85% of the value, like that seems so arbitrary to me. I get the concept. I understand why that's the case, right? Because you know, if you think about it, right, why do you pay the price of the option? Because it's expecting to move in that direction by that much. But why 85, right? That's my only question. Yeah, EK's saying, I think Gil's idea is good. Just use, yeah, at the money call plus put. Never heard of that 85% thing. Yeah, same here. I agree. I say we just do that. And then we can circle back to implied vol at some other point in time.
Yeah, that'd be fine.
Yeah.
Yeah, I looked at the VIX on January 3rd of 2023. It was about 22%, 22 at the VIX. So it wasn't wasn't
Yeah.
crazy.
Yeah, seems a bit excessive, right?
Yeah.
Say call at the money asset. Let me check that. And then we'll also do create the call asset. I'll also go create the put asset. Right, put, that's also at the money. Get the price of the call option, call at the money price. Get the price of the put option. Okay. And then calculate. I actually wonder what AI will come up with. Calculate the expected move using the call and put prices. Call at the money price plus put at the money price divided by 2. Yeah, the divide by 2 makes more sense to me. Why?
I threw it at AI, and AI came back and said that it was just it was a common rule of thumb with traders, but the traders I use don't use it. They don't do anything by 85%. So I think to start out, let's leave the 85% out.
This makes sense to me. Add the 2 together, divide by 2.
Exactly. And I think it's just that simple. And it seems to work. I've traded a ton of options doing it that way, and it seems to work. So
Yeah, that makes sense to me. Why don't we compare what that would be versus what you would have gotten, Kevin? Because you said the implied vol was what, 23 on that day?
Oh,
What'd you
yeah,
say?
it was 22. That was the VIX. Was the VIX is just, a composite of all.
Yeah,
the-
that's not really the implied vol on this, though. I've gone
No,
through that
it's not the
calculation.
same. It's not the same, but I was just trying to see if it was a very high VIX day. Would that?
Yeah. It's actually quite a complex calculation. So here's saying $1.50-ish. It's the expected move. So call price, put price.
$1.50. And what was the
Does
in
that
terms
match
of
pretty much
percentage? What would that be?
as a percentage? Let's see here. The underlying price was 382. So 150 divided by 382. 149 divided by 382. So that's about 0.3%, 0.3%. Does that sound right to you based off of what you've been using to trade?
That's really low, but it's 0.39%.
Yeah, 0.39%.
Okay, I can go with that.
What did you have as a percent move on that exact day?
On that exact day,
Yeah, on the January 3rd, 23. So I'm just trying to match up with what you have.
sure. Yeah, I understand. Right. Let me go back into OptionNet Explorer. It'll just take me a moment. Sorry.
yeah, let's reverse that, engineer that. I think that matters the most is duplicating what you got.
Exactly. I agree. Right now, I just want to get the result that you got, Kevin,
Got it. January 2nd. Okay. January 3rd. Sorry, I have to go to January 3rd. I'm pulling the data now. January 3rd. The price was 38.36, 38.35. The IV, oh, wait a minute. The IV is 35. Jeez.
Oh, so that's what we got. No? That's
Yeah.
right on. Okay. All
All right.
right. Well,
OptionNet Explorer says the IV is 35 at the mini call. 35.
okay.
What you
All right.
got?
Okay. Yeah, I think we got like 35. I think that's exactly what we got.
Okay. It seemed really high to me. I don't know.
It seemed high to me too. I agree with you. It seemed very unusual. But I mean, if that's what it's saying, then I think that's exactly what we got. So perfect. Okay. Yeah, I guess the beginning of 23 was a pretty risky period. That things were kind of crazy around that time. That's like I think that was like bottom of the bear market, no?
Yeah, I'm looking at the chart now.
Yeah.
Back that
I
far.
think that's pretty close to the bottom.
Yeah, actually, that makes sense. It was, yeah, it was pretty much at the bottom.
Yeah, so an IV of 35 is actually not that unusual.
Yeah, we had since all
Yeah,
of 22 was just
36.86.
brutal.
Yeah.
22 was brutal.
Yeah. Yeah.
What, it went down 30% in 22.
Yeah.
And we climbed out of that hole big time.
Yeah, definitely.
23.
Yeah. It's funny. Yeah. So I got an implied vol of 36.8. You said you got 35. That's
35.
pretty damn close. I'd say that's pretty damn close. Hey, but I added this divide by 100 thing here. So let's rerun
Yeah,
this.
you have to divide by 100. Yes.
Okay, so here, so I'm not going to get this put. This is just going to be a waste of processing time. So I'm going to get rid of that. Okay, good. That gives me a lot more confidence. The fact that your software saying the same thing. Cool. Yeah, I was talking to a friend of mine the other day, and he's just going to me. He's like, "Oh, like what's up with this bull market? It's like never ending. It just keeps going up and keeps going up." And I'm like, I mean, that's what happens when you exit a bear market. You have cheap money everywhere, and you're about to lower interest rates. You know what I mean? Like, I'm actually not that surprised that we've had this crazy bull market because every time you come out of a bear market, you tend to have this sort of thing, you know? So
Yeah.
he's looking at this and he's thinking, oh yeah, we're about to crash. And I'm like, yeah, maybe we might have a correction. That's not impossible. But you know, this is very normal coming out of a bear market. We had a pretty bad bear market. You said we were down 30 something percent.
Yeah, I was just guesstimating based on the high of January 22 to the end of the year. So
yeah, it's a pretty lengthy bear market that we were in.
yeah.
Yeah.
Let's see, I can measure it exactly. Let's see if I can get that.
I remember it well because we were running a trading business through the bear market and everyone was like anti-trading for like the longest time. It was so frustrating. Okay, so IV of 36. By this calculation, expected move is $7. That's very different than the other one.
$7.
Yeah.
So percent move would be 7 divided by what?
381. Say 382. So specifically it's $7.
1.8%.
That sounds pretty reasonable to me, actually.
In one day? That's a lot in one day.
Well, yeah, at the bottom of bear market. I don't think that's that crazy.
Yeah, I just measured it that we lost 22% in 22. That's ironic.
Yeah. Yeah, it's a pretty big tip. It's also just really long, right? But okay, the real question is though, how did you trade this, right? Based off of your back testing, right?
Yeah, so the wings are pretty wide then, right? Definitely very wide for the SPX.
Yeah.
Like that would probably be let me do a quick calculation based on what I have. Okay. Let me go back into AppsNet Explorer. That particular day, it was 38, 35.
I got a wing size of 7. Is that what you
have? Implied volatility of 35%. The wing sizes, expected move was 70 for the SPX. Okay, that's SPX. And you're saying it's 7 for SPY.
Yep.
Which is, yeah, okay.
Yeah, that's correct. Yeah. So if you had a wing size of 70, we have a wing size of 7. Bang on.
Yeah.
Perfect. Okay. Great. Awesome. I like that. Okay, so we go through. So we got that figured out. Perfect. Okay. All right. So we got that going. We create the butterfly. Let's see the trades that it placed. I want to see if it placed the same trades as you. Let's go through this here. Okay, so here's what it's placing. So it's buying a call at 389. Does that match?
What did we say? 382? Or no, what did we say?
Well, here's placing a call at 389. What did you play? Let's just talk about this. What did you do on that day? What call did you buy? What puts did you buy?
Okay, so I was trading SPX.
Right.
And it was 383.35. That was the at the money that day.
Okay.
Okay. So you buy, you sell at the money call, and you sell at the money put.
So what were the exact figures for it?
Okay, for that day for SPX, the at the money was 38.35.
Okay, I have 382,
Okay.
which 382. What'd you say it was? It's 383, 35,
3835.
3835. I have 382. This is at 10 a.m.
10 a.m. Mine is set at 10 a.m. Yes.
So why am I getting 382? Maybe because of the rounding. Let's see, the underlying price, let's see before rounding. 381.77. And you said your at the money was 383?
Let me do the SPY. Let me try the SPY. Let me see if I can get your exact
Okay.
numbers.
Yeah, maybe. Yeah, that makes sense.
It may have a 15-minute delay in the data too.
So, okay, the date is
Option net or we don't have any delay in our data.
No, I'm talking about his stuff.
okay. Look,
His situation.
so I'm looking at January 3rd, 2023 at 10 a.m.
Mhm.
The at the money for SPY is 382.
Yep. Yeah, exactly. So why was the SPX and SPY so far off? That's weird.
Okay, our numbers are matching now between the Option Explorer and what you're getting from Polygon. Yeah.
Perfect. Okay, so we sell a put and a call at 382.
Yep.
And then we buy the call at 389.
Yep.
And we buy the put at 375.
Just trying to do math in my head. Yeah.
I think
Yes.
that's 7, right? Yeah.
7, yes. I can still do math at 10:30. Nice.
Okay, so I think this is right. For some reason, the SPX and SPY was quite divergent at that time, which is unusual because those should be pretty damn close.
Yeah. Yeah.
I don't know why they were so far off. It must have been was it a really, did it move a lot during that day?
Yeah, and if you look at the price action, it was a big move that day. Yes.
That's probably why. That's probably why they diverged. Right? Because they're off by, I mean, not like crazy, but like I think 0.1% or 0.2%, something like that. But that's a pretty big difference between, SPX, SPY. The only thing that I could think of that would explain that would be if it just moved a lot, right? If it moved a lot, then they can diverge for like seconds at a time or minutes, right? Okay, but this looks right. So it looks like we have the right butterfly here.
Yeah.
Okay.
Yeah.
That's actually really good because, like I said, this is really interesting because now that we're using implied vol, like it really helps you place your condors and all that much better. This is actually, I really like this modification. I don't know where you got this idea from, but I really like this idea a lot.
Yeah, it's just trying to keep the underlying in the wings by adjusting on a daily basis.
Yeah.
So you want to get your chance of being right higher. You want to be around 80% win rate. So
Okay. Okay. All right, so we got that. So we're replacing this butterfly. That's good. We have this. Now, let's run this. So we have a big portion of this algorithm done. Okay. So now next thing, let's run this thing. For some reason, it's not producing a trades chart. That's the next thing I want to find out. What is going on? Why is it not placing? Why is it not creating that trades chart? Because it's submitting the orders. Everything looks fine. Everything is good. It should allow for, where is this? Check if it's time to close the trade. Sell all. Check if we should be stopped for today. And then this is this. I think it's, for some reason, I think it's not closing trades. So I want to figure out what the heck is going on here. It should be actually, it's 0 DTE, so it should be closing regardless. Because when I ran this back test, it didn't produce a trades chart. So that's why I'm wondering what is happening. Okay. Because now I think the only thing left is we have to do this adjustment, right? And that's it, no?
Yeah. You got the wing size fixed, and then adjust if it's down 10%. Basically, making a condor out of it.
Yeah. Look at that. Even just the butterfly is making good money already. Moving a lot. Big moves. Very profitable though. This is Chevis time to close the trade, so it closed the trade, and this is at that time, okay. So they made a big profit just on the butterflies by itself.
Any idea how many adjustments, what percentage, or?
Yeah, I put it in that Excel file in case you want to look it up, but let me look at the number again. I think it was quite a bit of adjustments. I think it was out of 114, there was, let's see how many adjustments there were.
Yeah, I remember we mentioned it was quite
59% adjustments, 67 out of 114, 58, 59%.
Great, okay, thanks.
I'm gonna also figure out why the heck this thing isn't producing a chart. Go to indicators. Indicators pie. Tools, indicators. Tear sheet. Plot returns. For some reason it wasn't.
It took some lines of code out accidentally. Oh, but that's called a Lumibot, right?
Yeah, this is Lumibot code. Yeah, because for some reason when I backtested it before, it didn't also 65% adjustments, EK just said. But that's huge. That's like most days. that's
yeah, right. That's a lot of days, yeah.
Yeah. So a lot of adjustments. Yeah, because the reason why I'm looking at Lumibot code was another thing that happened was when we ran this backtest, it didn't produce a trades chart, which is unusual. Because it's definitely placing trades. Like, look at how much money it's making just with the butterflies, by the way. Holy crap.
I mean, it is now, right? But before you weren't actually placing trades because it wasn't calculating correctly.
I think it was still placing trades before because
Okay.
we just assumed a certain wing size before. Now the wing size is variable, right? Whereas before the wing size was fixed at 2.
Gotcha.
Right? Yeah. Oh wow, this is a big drop. So that was making money, and just got killed.
Yeah, it shouldn't drop that much.
Yeah, there's something weird.
The losses are limited by the wing size.
Yeah, there's something funky going on here. The fact that it didn't produce a trades chart is something weird. There's something wrong with this, you know? Because before we do the adjustments, I want it to just do the butterflies. Let's see if it just does the butterflies, what happens, and then we'll add the adjustments later. But I think something is wrong here because it's doing this thing. Invalid value encountered in scalar power. What is this? This is unusual. CAGR, period years. There's something going on here and it's crashing. So I'm going to figure out why it's crashing. Specifically the thing right here. Yeah, tools indicators 54. Let's stop this. I'm going to make it shorter back test. I want to figure out what the heck is going on here. The 3rd was what, a Monday, Tuesday? I'm assuming that was a Monday because otherwise it would have started on the 2nd. Let's do
the 3rd is a Tuesday. I thought the market was closed on the 2nd. Let me look. I'm sorry. Yeah, the Monday is closed.
Yeah, that makes sense. Maybe that's also why this thing is crashing because the market was closed on the 1st. But that shouldn't happen. That shouldn't be a problem. We've done that before.
Yeah, the 2nd it's closed and the 3rd is open. Yeah.
Yeah, for some reason it's not producing a trades chart. And it's because it's crashing on the CAGR calculation. Well, how does
Have you watched the YouTube video that was made on your software by chance?
what the machine learning thing?
Uh-huh.
Yeah, I've watched it. I thought that was very interesting. This guy's using stuff, and it's funny because that's actually an old version of Lumibot. We've gotten way better since then. Which I think is an interesting thing.
So, but he didn't make it too long ago, no?
Yeah, it was pretty recent. It came out, I think, like 3 weeks ago. He must have been working on it for a long time because he's using an old Lumibot, or maybe he just didn't update Lumibot. But we actually worked on that in one of our Tuesday classes, by the way. We have a code for that. That's here.
Did you
ML news trading?
Gotcha.
We turned it into an options algorithm because his thing, this guy, right?
Yeah.
Yeah, his thing is actually wrong. When we looked at, we did this, what, 2-3 weeks ago? You guys remember this, right? We did this a couple of weeks ago. And the way that he was trading it was he was going into like this extreme amounts of margin that were just like impossible, right? So we modified that because it seemed to have a good signal, but he was using margin in ways that no broker would actually let you do it. So we converted that over to an options trading algorithm.
Gotcha.
Yeah, we still didn't get like any crazy results. I mean, I think if we spent more time on it, we'd get something interesting. I'm actually very interested in the algorithm too. Maybe we could even use that to improve this. I think the core part of that is like using new sentiment data to determine trades. That's right.
Yeah, because on this one, right, you're also talking about like if the market is moving like crazy, you can actually get from the sentiment somewhat, right?
Right, exactly. I definitely agree with you on that. Yeah, because we could do the same thing, right? Okay, why is this calculation wrong? So 1 divided by period years. That shouldn't be a problem. Yeah, CAGR comes out 6. Okay, what's the issue here? It's calculating a second time. Total rat period years. That still seems fine. Why is this calculating so many times? Period years. Now it seems to be doing fine. Oh, I know why.
Right. Why is there so many trades on the same day?
I know why. I put show plot false. That's why it's not showing up. Like I thought it was like a bug or something. It's just that I literally set it to false. Let me rerun this. Then we can now analyze the trades. That's my fault. I forgot to set those back to true. I set them to false for our Condor martingale strategy because it was annoying because I was running like 100 different back tests. And it was just my browser was just like getting filled up by all this. So I set them to false, but when we set them to true, it should be fine.
Okay. Great.
But sorry, you had a question?
Well, it looked like it was trading multiple times on the 5th. I didn't understand that.
Yeah, now that we get the trades plot, it'll be easier to analyze. Yeah, because I had set it to false. So now that it's true, we'll actually be able to look at the trades and we could just compare to what you're doing. I think there's something off about it. Just based off of how much the portfolio value is moving, it
Yeah, it's
shouldn't
moving a
move
lot.
that
It
much.
shouldn't
Yeah,
move that much.
yeah. Because you're only risking 10%. So you should not be able to lose more than that. You have a defined risk on the butterfly, and you're only risking 10% of your portfolio, and we're trading for 5 days. You shouldn't be able to move this much. Maybe to
No.
the upside, but not to the downside, you know?
The
We'll see in
portfolio shouldn't change that much during one single day. Or
Yeah.
what? Oh, are you looking at this every 5 minutes or?
It's doing it every 5 minutes, yeah. But it's
Okay.
supposed to, maybe that's what's broken about it. Is it supposed to only trade once for the day? Maybe, yeah, maybe what we need to do is we need to go stop for the day equals true. Do we not have that? That's what the problem is.
I mean, I kind of like the current returns better.
Yeah, okay. Good point.
Oh man. Yeah, that is definitely quite extreme. Okay. I think what it's doing is it's just taking on like an insane amount of butterflies. I think that's what it is. I just don't think I think it's just continuously putting on more, putting on more, putting on more. That is quite an extreme return, 215,000 out of, from 35K to that. Yeah, look at that. Look at how many trades it's putting on throughout the day. That's the problem. So the mechanism of it stopping itself is not working. So stop for the day. Now I've set the stop for the day. This should be good. Let's see if that actually triggers. But then you would have thought that we already created butterfly, last butterfly purchase. This should also be triggering. Last butterfly purchase. Last butterfly purchase should be okay. Yeah. So what the heck is wrong with this thing? If it exists and because I think this needs to be date. dt.date. Yeah, that's probably what it is. We need to go dt.date. Small thing. I think that's what it is. This should fix it. Yeah, the funny thing is about these backtesting things is you see these like crazy returns like this, but then you look at the trades plot, and it's like there's no broker would ever let you do that. You know what I mean? It's the same thing as that machine learning thing. I saw it and I saw the same thing. It's just like these insane amounts of trades. You're actually in this case, your cash isn't doing anything that crazy. But there's no way a broker would let you put on this many butterflies. Like this would violate so many margin requirements. Last butterfly purchase is none. We'll go there. Date time dot date as non-tribute date. Oh, so it already is a date object. Okay. That's strange. Let me see, where the heck is that? So DT, I thought that was just the date time. Expiry, DT.date. Yeah, it's already, what are you talking about? Where is this? The problem was at 106. DT.date. Oh, because it's doing stop for the day. Okay, that's what it is. So I guess what we need to do then is we need to pick one or the other. I'm actually down for this because there's data loss otherwise. So we keep that as the date time. And then here we're using dot date. I think that makes more sense. Then that way we keep the actual data of when it happened, because that could be useful in the future. I don't know if you guys have kids and have I don't know if you guys have a Nanit, but it's kind of crazy. I can like see that my baby's crying right now. This machine learning has gone kind of nuts on this stuff.
You can see that your baby's crying. Oh, you have a monitor?
Yeah, I have a monitor. It's called a Nanit. It's a
A
NIT.
Nanit. Oh,
Yeah.
I'd never heard of that.
Yeah, it's like a new monitor. Sorry, it's like a detour. But it's I think it's interesting just because of the technology. Right? It's like this baby monitor here, and it has like a bunch of machine learning in it.
Oh,
So
wow.
yeah, so it's like if he gets up and stands in the crib, it will alert me because he's
Oh.
about to fall out of the crib. You know what I mean?
Yeah.
If he's crying, there's an alert that goes off. If there's the machine learning is actually quite advanced.
Wow.
This is Nanit Sound. No, this is
That's come a long way.
Technology at its best to make sure you don't get any sleep.
Yes.
yeah.
I can't get no sleep, Nanit.
Let us know when your wife bounces that off the wall one night, okay?
It's I don't know. I guess it gets rid of some paranoia. It has like a breathing band you put it on. It's like things have gotten so fancy, you know. Like I was telling my mom about this. I'm like, yeah, we have this thing that detects all this stuff, and she's like, what the hell are you talking about? Like back in my day, we would just like if he's crying, you feed him. Like that's it. Like you don't need all this stuff. It's insane. Like especially for babies, they play off your paranoia. I've realized that. Even yeah,
Any way they can make money, they'll do it.
exactly, right. Even when we were at the hospital, they were asking us if we wanted to take the placenta blood and use it as like stem cells. Yeah, right. And at first I was like, yeah, absolutely. Like, I mean, like because the pamphlet's like, oh, if he gets any diseases, you know, there's sickle cell anemia, like all these different things. I'm like, oh, that's amazing. Yeah, like I want to do that for my kid. But then you read up on it, and it's like, well, if it's his stem cells, it's not going to help him because he already has that problem. You know what I mean?
Yeah.
Right? You know, like so it's not helpful. It's only helpful if it's a sibling. And then you look into how often people have actually used this. It's like out of 70,000 people, it was like only 14 actually used it. It's like, I don't know, it's like $1,500 for this thing. Like this is nonsense, you know? Okay, but this looks right now. Look at this.
Yeah, okay.
This looks good. It made quite a bit of money actually with just the butterflies. Do you want to, let's go through each trade. You want to do that?
Yeah.
Okay. So here is Jan 3, 10:30 a.m. Okay. It put on 2 buys and 2 sells. It bought, this is for a $35,000 account, by the way. I don't know what account size you're using. I can size it to be what you have.
Yeah, 35 is good. I mean, that's so you don't have the day trading rule. And you're using only 10,000 of your account, I think.
Yeah.
For that. And then you're using 2K for your lot size. And how many lots do we have? How many option contracts do we have?
4.
Is it 4? Oh, 4. Okay.
35K account. Right? Let me just confirm. Yeah, 35K account. 4 buys, 4 sells.
Yeah. Okay.
The sells, I think, are 381 is the call and the put sell. Right?
Right. That's the at the money.
Yep.
Put and call.
Yeah, so
right. You sell those two. Yep.
Then you buy at 389 and 373. 389 being the call, 373 being the put. Does that sound about right?
Yeah, the wings are what would you say, 7 in it for this date? Yeah, about 7.
This is doing an 8 wing size, so it's
8.
slightly.
Okay, 8. Okay.
Well, yeah.
Yeah, it's 8.
Remember, it was
Yeah.
like 4 to there. I don't know why it's all of a sudden doing 8 instead of 7, but that's also sounds pretty reasonable.
Rounded up.
Yeah.
Yeah.
I think it was 7.3 something, I think, when you calculated it.
Yeah, it was pretty close. Something must have changed it.
So what was the profit for that day? Is like $700 or what was that?
Let's see. Our cash went from 35,000 all the way up to 36,187. So made like
1,100.
1,100 or so, yeah.
Yeah, something like that. But then it sold it. It was just the same day. They sold it later in the day. It was still Jan 3. Sold it after the sell, the profit was left. Right? Because your cash jumps.
Why did it sell? Was it the end of the day or what was it?
It sold at 3:30. So yeah, so I think end of the day. Because we said it to be end of the day to sell.
Okay. All right.
Right. So it made a pretty good profit, you know. It made if you look at the portfolio value, which is like net of everything, it's made $747 that first day.
Okay.
That's pretty good.
Yep.
Yep. Okay. The next day sold at 382. This is Jan 4, 382.
Yeah.
I'll put in a call. And then it bought 390.
So it's another 8 day.
Another 8 day.
Yeah.
Makes sense. Right. And then 374, which was 374 plus 8. Yeah, this is also 8. Okay. So that sounds about right. And then we sell. And after the sell, we made a nice profit here. We're up another, say, $1,000.
Wow. Okay.
It's looking legit to me so far.
So is this selling at 20% profit or is it just it's going to the end of the day?
Just going to end of the day.
Okay. Okay. Yeah.
So far.
Right.
And I guess we need to add the adjustment when the loss happens, right? We haven't done that yet. But so far, it's just been every single day was just great, which makes sense because the wings are so big, right?
Yeah.
IV's so high. Like, I mean, you got to have a really bad day to like break out of that. Here, what is this one here? So this one's 80 selling at 380 and by 387. So another 7. Yeah. So big IV days. So that's probably why it's so profitable too, because the IV is so high, right? You're making like this killer amount of time, you know, data. I'm pretty happy with this. I think this makes sense to me.
Yeah, it looks good so far. Yep.
Okay, so I'm gonna read what you guys wrote. We have the outlet sock says just to the ER on a false positive oxygen reading, not a fan. Yeah, I heard the socks are not as good. The band I heard is better. EK says, so that's one butterfly, or are you trading 4 butterflies? No, we're trading one butterfly. Well, I guess one butterfly times 4, right? So yeah. So I
Four
guess
contracts. Yeah.
yeah, 4 contracts on a butterfly. Yeah. So I guess 4 butterflies. Yeah. Okay. This is looking good to me. Why don't we run this a little longer and just see what happens on that? And then now we got to add in the adjustments. So let's maybe back test for like a month, let's say. 1, 2 to 2, 2.
Is there a stop limit on it right now? So if it gets up to 20 or 25%, it bails automatically, or does it just go to the end of the day no matter what?
No, I think there's the limit already on it. Actually, let me run this in debug mode so that I can actually see that getting hit. Because you're right, we have it, but the question is it actually working?
That's what I'm wondering. It seems like you make $1,000 on that trade, you would have gotten stopped out somewhere, stop limited.
Yeah. Or maybe we don't have it actually. No, actually we don't have it. You're right. We do not have the profit percentage. So, yeah, we do not have that right now. We have the time when it hits the time. We have the stop for today, but we don't have anything profit or loss. We're not using that at all. First adjustment loss, max loss. Where is that even being used? Max loss hit. No, it is actually. It should be right here.
Oh, that's the max loss is in there.
But we're doing it on the full portfolio value. Portfolio value at purchase. But you're saying it's a loss on the trade, not on the total
trade.
value. Yeah. So I guess what we need to do then is max loss on the portfolio. We need to adjust this bit. So I think if we just multiply it by the amount of the portfolio that we're using, and this should work fine. Because what we can do is it's a pain to like actually calculate the value of the whole butterfly. We can do it that way. We could say, okay, what's the value of the butterfly and how much has that changed? Or we could just say, what is the value of your account and how much has that changed? But factor in the fact that you only used 10% of your account or whatever, right?
Yeah.
So what change in your portfolio value or account value times 10% is, what we're looking for. Okay, so we got to make those adjustments. Take profit. Yeah, so both of these here. So they're not getting hit at all. So let's work on that next. Actually, let's also I'm gonna shorten this back testing time period because that's gonna be way too long. Sorry, I'm just gonna read what you guys wrote in the chat. Will says, what would you suggest for the minimum starting account balance to have for a strategy? Will, you need to have at least 25K for this because this is violating the PDT rule otherwise. Is that correct? Me saying that, Kevin?
Yes. Yeah. That's why the 1 DTT was some advantages. When we did the Iron Condor Martingale, we did a 1 DTE.
Yeah, so I guess we can even adjust this to be a 1 DTE if you want to use a lower account value, although I'm not sure the results will be the same. We can test that. But yeah, at least 25K will for this. Because it's using 0 DTE options and there's a pattern day trading rule, which says that if you do X amount of round trips per day for one stock, I think it's 5 per week or something. If you do that on an account less than 25K, you violate that rule, right? But we could adjust this thing to be 1 DTE to get around that. Just the results will probably be different.
Or you could trade only like three days a week or something.
Yeah, something like that. We can make adjustments. Actually, I guess yours does a 1 day a week. No, 3 days a week.
Yeah, right.
It's a round trip, anyways, with options. With stocks, it makes sense. But with options, when you're putting on a butterfly, is that considered 4 trades? A butterfly?
I mean, that's a good point. Yeah, that's true. I don't know. I would think a round trip would be a buy and sell of all your contracts, but I could be wrong.
Yeah, I don't know. Sounds like a question for ChatGPT. Like,
yeah, why not?
Yeah. Yeah.
Then we
No
can compare that to Gemini, see if Gemini comes up with the same answer.
Oh my God. You know what though? Like at least they're all competing against each other. Grok, Gemini. There's a new model that came out today called Mistral. I don't know if you guys heard about it. It's actually the second best model now compared to GPT-4. GPT-4 wins all of the things. Like when you test it based off of, you know, how good it is at exam scores and all that kind of stuff, right? GPT-4 is number one and has been number one for a very long time. Even Gemini has, like, I know it has more tokens and stuff, but it still can't beat GPT-4 in terms of reasoning and things like that. But Mistral is a new algorithm that just came out. It's a company out of France that has the second best algorithm now. And
Wow.
Microsoft just bought a 15% stake in them.
Oh, wow.
Yeah. And I'm a Microsoft shareholder, so I'm happy with that, personally. That was another one. We talked about those Microsoft call options at the beginning a couple months ago. I should have kept those. I kind of abandoned that. Should have kept that. That would have actually worked out well. Okay.
Actually, I have to credit you. I did do a call option on Microsoft, and I got a good chunk of money. Thank you.
Oh, nice. Oh.
After you mentioned that one day.
Awesome. Very cool. I don't know how
checking out Coin too.
Yeah. I don't know how you made money off Microsoft and I didn't. We got to figure out what the timing of that purchase was. Maybe you bought a longer expiry date or something.
I did. I had a long expiry. Yeah.
Oh, that's what it is. I had a very short expiry and it just turned against me those 2 weeks. But if I had a long...
it did turn against me. That's true. But then I had my expiry was out pretty far, so I made it back.
Yeah, nice. I should have done that instead. Next time I'll do that. I've learned my lesson, you know. It's funny, like you can go through all the theory of options trading, but it's not until that you hit your feet on the pavement or whatever you call it. It's not until then that you like really understand all the details, right?
Yes, not until it hits you in the wallet that you learn the lesson.
Yes,
exactly.
Yes,
exactly. Yeah. Okay. EK says, will be interesting to see if adding 20% profit target will reduce the total profit. Yeah, I agree with you, actually. I think it might. It might actually reduce the total profit. So let's see. Okay. So let's add that in.
Well, that's the beauty of this type backtesting. You can change these parameters and see how it performs.
Yeah, put it as a variable and you can run it at 25 and 30 and whatever.
Yeah, exactly. Yeah, it's the beautiful thing about this. Okay, so we see this here. This is the max loss. Let's think about how to change this. So max loss portfolio value is the portfolio value at purchase times 1 minus the max loss. But that's not correct because it has to factor in the fact that we only bought 10% to begin with, which is, by the way, the variable name is percent to trade. Where is that even being used? Percent to trade is being used here. Okay, we're using that. We have to adjust this. So portfolio value at purchase times 1 minus the max loss. So I think we take this. How do we factor them? I'm trying to, my brain's not working right now.
Why couldn't you do percentage of percent to trade?
What do you mean percentage of percent to trade?
Oh, I thought you calculated the percent to trade based on portfolio value earlier in the code. Percent to...
Yeah, percent to trade is in there. So percent to trade is 10%. Right. And now what I'm asking here is, okay, how do we calculate if we hit the max loss or take profit, right? So the max loss, let's say take profit, because I just feel like that's easier to think about. So take profit portfolio value is equal to the portfolio value at the time of purchase. So let's say 35K at the time of purchase. And take profit is 20%. So 1 plus 20%, so 1.2. So 35,000 times 1.2. 35,000 times 1.2. Oh, 42,000 would be that. But that's not really what we're looking for. We're not looking for that. We're looking for, I think it looks like this. Portfolio value at time of purchase times percent to trade. Right? We do that. Plus, so it's the portfolio value at time of purchase plus the portfolio value at time of purchase times the 10% times the 20% increase. So it's 35K, 35,000 times 10% times 1.2. That's $4,200 plus 35,000. So if we hit 39,200, we take profit. Does that sound about right?
Well, the percent profit is based upon the individual trade margin requirement. It's not based upon portfolio value.
Well, wouldn't those be the same thing?
No. The margin requirement is based on the wing size that you use. So like, for example, like those first days in January, we had a max wing size of 7. So those days we have a bigger margin requirement in our.
Enough. You got enough. Hush up.
Sorry, I'm gonna mute you for a second, Gil.
Yeah, so we had a bigger, so that would be the wing size of 7. And if we had 4 contracts, so that would be $700 times 4 or $2,800. Did I get that right? Yeah. $2,800 margin requirement. So a 20% profit would be 20% of $2,800 or about almost $500. About $500 would be a 20% profit.
That's it?
Yeah.
So first of all, I completely misinterpreted what you meant by the profit target.
Right.
Completely different thought process. Okay.
Right. So what you're
then
getting a
$500 seems
credit.
very small. This seems tiny.
Well, you're getting a credit at the beginning of this trade, and that is your profit, max profit, right? And then the way you calculate profit is based upon your margin requirement, because that takes away buying power from your portfolio.
Right. Okay. That seems odd. Like, why would you do that? Why would you want to do that?
What do you mean? Based on margin requirement?
Yeah,
Margin requirement?
Yeah, why would you calculate it that way? Like, why wouldn't you just look at the change in the value of your portfolio? Like that seems more. I guess because you're looking at the wing size, like because the wing size is a factor of it. So if you're seeing if you pass out of the wing, can you tell me like what the reasoning behind that is? Like why are we doing this?
I guess it takes account of when you have very broad wings, your margin requirement increases a lot, because the margin requirement is the wing size minus the net credit, for example. But if you have a very narrow wing, then your margin requirement is very small.
Right. So I guess you're saying then 20% of the wing size because you don't want to hit a margin call. Is that what it is?
Well, the wing size basically is your max loss. that you can the max loss would be the wing size minus the credit that you brought in at the trade.
Oh, I get it. So you're not talking about the loss of the account value. You're talking about how close are you to hitting the end of that wing. That's what you're talking about.
Well, no, theoretically, at the time it expires, you could lose the wing size minus the credit received. That would be your max loss at the time that it expires.
Yeah.
Right.
That's 100% loss.
Your broker requires that you keep that buying power in your account in the event that you hit the max loss.
Right.
So you're losing buying power. That's why they are taking the percent profit as the amount of buying power that you've tied up during the duration of the trade. That's why they do it that way. So
it's
I mean,
the buying power that you've taken up. Okay.
Yeah. So I
So it's really not like a profit target. It's really more like a margin target. If like I feel like that'd be almost named more appropriately, you know?
Or I mean, it's a percentage of your buying power that you're risking.
Right.
I mean that's how I'm aware that it's done. Let's see. I'm trying to find the profit. Yeah.
Okay. So I guess all we need to do is, again, we're just trying to replicate what you did, right?
Yeah.
So, so what's the calculation again? So we're saying the wing size. So I guess we need to keep track of the wing size now.
Yeah.
We'll say self dot last wing size equals none, right? And I go set the last wing size, right? And then we're using that to calculate. So this calculation is like way off. Yeah, we're not using portfolio value at all. So so what was it again? It was last wing size and what?
Yeah, so I think we talked about this before. The max loss would be the wing size minus the net credit, but it's kind of iterative in the sense that the net credit varies depending upon the price of the option. So a way to estimate the net max loss would be just to look at wing size only, for example.
That makes sense.
So like what we said earlier, let's say your wing size is 7.
Right.
So 7 times the number of contracts. I think we had a contract size of 4. So that's 28 times 100 is $2,800, for example, as an example.
Okay. And then we're looking to see if the value of our account has moved by that much.
Well, it tells you how many contracts you can have, basically, because it basically tells you your lot size that you can use for this trade. How many lots,
Right.
how many contracts can you have?
Right.
You don't, so like that $2,800 of margin, we want to make that like 10% of your account or 20%, whatever figure you want, right?
Right. Right.
And so that just tells you how many contracts you can have, right?
Right, but the question, so I guess to put it to, what is the final thing that we're trying to figure out? So
Yeah.
we put on the trade, we're running this trade now.
Yeah.
When do we find out when we exit? Right? When it's that take profit, at stop loss. Right?
So
how do we calculate that?
right, so we're risking $2,800. Let's say that the The loss is 20%, so that would be 28 times 2. Well, let's say it's $600. So take profit would be $600. Our loss would be $600.
In account value.
In account value, yeah.
Okay. So why don't we, so I think there's an easy way to do this. So what I think we should do is we should calculate the take profit and stop loss at the time of the trade, right? We place the trade. Here's where we want to exit, right? Calculate the take profit account or portfolio value. And it's this, right? So it's the wing size, so self dot take profit portfolio value equals portfolio value at purchase, right? Plus, let's just separate these two. Take profit move equals, we're going to go wing size times number of contracts, which we have, where's the number of contracts? I guess we do that in the butterfly. So I have to return that, I think is what's happening here. Because it's this trade submit order quantity to trade. Where is that coming from? Quantity to trade, quantity to trade. Quantity. There it is. Okay. So wing size times quantity times 100 times take profit, right? That's the take profit move. And then it's whatever time at purchase, portfolio value at purchase. We'll say portfolio value, because that's what it currently is. Right, so it'll look like that. And now we just say we use that value. And if you've gone above that, we take a profit. If portfolio value is above, take profit, let's say above or equal to, actually. That's it, right? That sound about right?
Yeah, so you take, okay, that sounds right. Yep. Yep.
Okay. We'll run it in a debug mode. We'll see if that actually makes sense. We'll see if it matches up to what you did.
Yeah.
Self dot stop, we'll call it stop. Is that what we're calling it? Stop loss. Take profit. And then there's max, we'll call it max loss.
Max loss, yeah.
Yeah. So I guess we could do first adjustment loss the same way too, right? Max loss or first adjustment loss, they're calculated the same way.
Yes.
Right?
Right.
It's a different number. Okay. Okay, perfect.
It's
okay.
calculated the same way, just a different percentage, yeah.
Awesome. Okay, so this makes sense. So max loss, portfolio value, self dot first adjustment loss portfolio value. We calculate all those here. So this is calculate the take profit portfolio value, and we calculate the max loss portfolio value. Yeah, that looks right. And then calculate the first adjustment portfolio value. That looks right. Okay. We'll when we run this, we'll see. You have the calculations, right? So we can compare it.
Yeah.
So you go to self dot max loss portfolio value. And then we also want to do check if we hit the first adjustment loss. There we go. Okay, I feel like this is okay, but this first adjustment loss is going to be completely different because this is when we put the condor on, right? So we don't want to sell all. That definitely doesn't happen. First adjustment loss hit. Stop for today. Okay. Today, I think we need to remove this here because that wasn't relevant. First adjustment loss hit. And then we'll have to go to do condorize the butterfly. And I think that's the last, right?
Yeah, that would be the last thing. Yep.
Yeah, okay. We're almost there. This is getting so close. It's amazing. It's already making money even without that, but you know.
Right, right. I mean, that's great. If we put these parameters in there, we adjust them and see what works best. It all depends on the market too, you know.
Yeah.
The market's constantly changing, so that's the beauty of putting the variables in now so that you can make your adjustments as the market changes.
Yeah. Okay, let's see how this happens. This is really cool.
Question.
Yep.
Is the wing here is depend on the expected move?
Yes.
Okay. And do we have a condition to not to put a trade on like on the crazy day like FOMC, something like that for the Condor?
We do not have anything like that, no.
Okay.
But in some ways, it does factor that in because it's based on the implied volatility, right? So if something crazy did happen, IV spikes, and that's just going to widen our butterfly.
Okay.
So it's not that we don't put it on, it's that we put way bigger wing size.
Okay. Okay,
So
got it.
in a way, it is factoring that in, right? Not directly, but indirectly it is, right?
Okay, thanks.
I would agree with what you said, Robert, except for the day that the FOMC.
Yeah, if it happened during the middle of the day, then you know, well, what are you
Like,
going to do about it anyways, right? Like
you set the wings in the morning, but FOMC is like 2 p.m. for
yeah,
example. I mean, that's the only caveat.
yeah, yeah. I mean, you know, I guess we can add we can add to this thing. We could like check the news or like that seems like kind of an. I really like that algorithm that we made with the machine learning stuff because what we could actually do is we could check the news and see if some like crazy negative stuff came out and just like cancel everything. You know what I mean? Like
Yeah.
something wild happened is eject. You know,
Eject.
like
Yeah. I like that. I like that.
Yeah, I think that's a good idea because the Condor you can lose money so fast if it moves so fast.
Yeah, definitely.
Yeah.
Yeah, I agree. Yeah,
Okay.
I think that the machine learning thing that we worked on a few weeks ago, we can like add that to like everything. Seriously, I feel like that's like this generic thing that we just add across the board to a bunch of different algorithms. Okay, so let's take a look at this. So 35K first day, take profit portfolio value would be 35,980. Does that sound right to you?
980. 980. I guess I'm thinking of doing the calculation in my head. So 7. Is it 7 wide that day? What's the
Times
7?
7 is 7 quantity also.
Why is it so big? Wow. And quantity's big, it seems.
It shouldn't be 7 though. It should be 4.
Right.
Oh, it was 4. What the hell's going on here? Why is it saying 7? What are you talking about? Portfolio value to risk, 5250. Wing size 7. Why is it different now all of a sudden?
Portfolio
50,
value risk.
50 divided by 7. 750. I mean, the math works out. 7.5 and then round down.
Where does portfolio value risk come from?
This comes from portfolio value times percent to trade. 50. Oh, why is it doing 15? Oh, I know why. Because it's the second time around that it's doing this thing. Let me restart it. Because it's risking 15% instead of 10%. Let's see. Yeah, 10% here. Oh, I know why. This is why. Because I added it to a CSV file. Let me delete this. There you go. So fix it. That's why it's 7. Because so if it was 4 at 10%, 7 at 15% actually makes sense.
Okay.
Yeah. Because
Yeah,
the reason why it happened is because I added a line to the CSV file, and there's code in here that says we've already done the 10%, skip 10%, and go straight to 15. But we didn't actually do a 10% because that wasn't the correct thing. So yeah, so we're just gonna have to remember to keep deleting the CSV file until this thing's fully working. Okay, so take profit 35,700.
Okay, that sounds more reasonable. Yeah.
Sounds better. Okay.
Yeah.
Max loss.
And our quantities 4 now, is that right? Quantity.
5.
Oh, 5. Okay.
5. This keeps moving on us. It was 8 and 4. Now it's 7 and 5. Why did that move on us? It seems like it's like randomly moving. So it's 7 and 5. Before it was 8 and 4. This is, yeah, because this was what? 381, 389. So it was 8 and 4.
That's 7, yeah. Okay.
Yeah, and then now it's 7 and 5. Okay, whatever.
Wait. Quantity's 5.
Yeah,
Why
quantity's
did it
5.
increase? I
That's
thought we went down to 10% of the portfolio. Should have gone down.
It should still be 10%. Yeah, so 10%, percent to trade, 10%. Yeah.
Okay.
I don't know, whatever. When we ran this thing, there's something different about it. It was 8 and 4 when we last ran it, but now we're doing 7 and 5. I don't know why the difference is. Something changed. I don't know what changed.
Okay.
I don't know. We'll have to figure that out. Maybe the risk-free rate moved or something. I don't know. We'll have to figure that out. Yeah, because I actually think we need to fix that because it's using today's risk-free rate to calculate the implied volatility. So there's still a bit of an issue here. I wrote that down as a bug. I don't want to keep you guys to do that. I'm going to do that on my own. Because that's not something you guys need to go through. We have other things to focus on, but that would, I think, add a little bit better accuracy.
Could you look at take profit move? What is that? 700. Oh, max loss move is 700 too. Okay, that makes sense.
Yeah, they're identical.
Yep.
And the first adjustment would be 350, right? Yeah, 350.
Perfect.
Okay, so this looks good. All right, so then let's see now, is it actually going to hit these things? There it is. hit the first adjustment. That sounds in line with your percentage. You said 65% of the time. The first day it did happen, I'd say by chance, that sounds about right. So
Okay.
this first day we should have adjusted. Is that right?
On the first day, well, let me look at the historical record just a minute. Yeah, we'll have an adjustment on the 3rd of January.
Yeah. Okay. Perfect. Okay. And I don't know if you care the time, but it's at 10:20 a.m. It's actually pretty quick.
Yeah, that's why I was playing with this idea of waiting till 10:30.
Yeah. Okay. Because that's a very fast adjustment. Yeah. But I guess you said this day it moved a lot anyways, right? So I guess that's not too surprising.
Yeah.
Okay, so now we need to add in this last thing. We need to condorize this butterfly.
Yep.
So let's think about how to do that. The way that you did it was you sold twice as much. No, you purchased twice as much. So I guess we need to keep track of the quantity, right? We'll have to keep track of
Well,
like the quantity.
well, let's back up for just 1 second. So it depends on which side is pierced, for example. So if it's the call side is pierced, you do one thing. If the put side is pierced, you do another.
Right. Either way, it's based on the last quantity, right?
Based on last quantity. What do you mean? I'm sorry.
Well, if it's 4, the quantity is 4. So now
Oh.
to adjust it, you need to do 8.
Got you. Right. I got you now. Yeah, I understand. Yeah. Okay.
Yeah, but you're right. We need to check which side was pierced, right?
Yes. And that's based on either side you have a long put or a long call. They're the wings. So you have to decide.
Yeah, which way do we go? Do we go more or less? So we'll have to know. I guess we'll get the price of underlying. I guess a quick way of doing it is we'll just say the price of underlying at purchase and now the price of underlying currently. And you can say, did it go up or down? Right? Quick way of doing it. Let's say underlying price at purchase.
Well, you know where the wings are, right? If the current price is below or above the wings, I guess that's the thing. So on the call side, if the current price is above the long call, then you've pierced the call side. If it's below the long put, then you've pierced the put side.
Right.
The price of the underlying.
Yeah, I just think that's harder to calculate than just looking at where the underlying price went. So underlying price went to the left, you pierce the left. Underlying price went to the right, you pierce the right. You know?
Was a question of amount also. Like it could be above
So
the money.
maybe this helps. If the underlying goes higher than the call strike price, or the underlying goes below the put price, the strike price. So the strike price, you're comparing which one. So you can compare both, and either case, then you do the adjustment. So that you're comparing with the strike price of either one. And then
Yeah. Yeah, I think we're all saying the same thing. I'm just trying to do it like an easy way to calculate it, you know? Because we can do that. You're right. We can take underlying price and subtract the wing size and see if you've passed that. But that's not even I mean, we're looking at the change in the portfolio value. So it's not even about that it's pierced. That we're not calculating whether it's pierced. we're calculating whether it's moved by more than this adjustment loss. So it might not have even pierced, right? Maybe it didn't pierce. Maybe there's a situation where that's possible. But the point is that it moved down, not up, right? Because it could either go down or up, right? If you went down, then you pierced to the put side. If you went up, then you pierced to the call side, or pierced, right? You broke out to that direction, right?
Well, if you pierce either side, you lose money. It's the same result.
Yeah. I'm just saying, look, we know what price we bought when the underlying was, right? Let's say we bought when the underlying was 382. If we have now hit our first adjustment loss and the price is 390, well, then we know we need to adjust the call side.
Right.
Right.
Agreed.
Right?
Agreed.
So, I mean, we could do all this calculation stuff, but I don't think it's necessary, right? We just say, where are we relative to the underlying price when we bought it? And we could say, well, we hit the adjustment loss. We are now above when we purchased. Now we need to adjust the calls. Or if we're below when we purchased, we now need to adjust the puts. Right? It's just a shorthand way of doing it, right? We're not exactly calculating it, but I don't think we need to.
Well, I guess what I'm thinking about is, let's say the underlying is above the at the money call or put that we purchased or we sold, excuse me. But it's not above the long call or put. It's still in the tent.
Yeah.
So wouldn't your criteria trip that?
Yeah, it would. But isn't that the whole point of this first adjustment loss? Because then if this isn't relevant, if we're not paying attention to first adjustment loss, we're paying attention instead if it pierces the tent, then we should nix the whole first adjustment loss completely. No? This shouldn't be based off that. It should be based off piercing the tent, not based off the first adjustment loss. Or does it have to do both? Does it have to both pierce the tent?
Well, it has to be both, because you could have it's not always there are other things besides the price that influence the P&L. There's also volatility.
Mm-hmm.
That can reduce your P&L. If there's increased volatility, it'll cause the price to increase and your P&L will go down.
Okay.
So it's more than just the underlying.
Okay, so it has to A, do the first adjustment loss, and B, pierce the tent. It has to do both.
Well, it's a or. It's an or, not an and.
An or.
Or, yeah.
Okay. All right. First adjustment loss hit.
So, or to be proactive, right? Just to be cautious. Kevin?
Right. You want to proactively prepare for a continued move in that direction, whether to the put side or the call side. Yes. And condorizing basically makes the tent even wider. So you're sacrificing some potential profit, but you're improving your probability of getting a positive trade.
Your win rate goes higher. Thanks.
By the way, I don't know if you guys saw this, but AI is incredible. I can't believe it figured this out. I said, check if it pierced the tent, and I actually wrote all of this code. Like, what the hell? That's right. No underlying price. Because are we getting underlying price? We're getting underlying price is here. Yeah. And underlying price is underlying price at purchase plus the wing size. Right? That's piercing attempt.
Yes, correct.
Yeah.
All right.
Amazing. Okay.
Are you sure you didn't do that, Robert? And the AI is just like holding you back or what?
Hey, this is recorded. You could just rewind the video, you know. You know, I would love to take credit for that, but no, I did not do that.
Okay.
Okay, cool. So now we need to write code to condorize a butterfly. Yeah, since there's two different conditions that can cause this, it makes sense to have an entirely separate function for it. So def condorize butterfly. Let's just write it out here. Let's just write it first, and I'm gonna now copy it over. So how do you condorize a butterfly? You would first of all need to know what side was pierced.
Yes,
right?
Either the put or the call.
Maybe I'll do it here because this is a little bit more obvious for the AI at least. Determine which side of the tent was pierced. Tent pierced upside, tent pierced downside. Perfect. Okay. So now that we've determined what side was pierced, that's going to say 10 pierced to upside, 10 pierced to downside. We would say
basically it's kind of a conditional statement. If tent pierced on upside, then you adjust the call. Tent pierced on downside, you would adjust the put.
Yeah. So right to adjust, right to trade, I guess. Okay, right to trade. Right to trade. Okay. Fair. Let's just see what AI does. Underlying price -5. What the hell are you talking about? This is no. See, sometimes AI is so brilliant, and sometimes it's just making up. Like, what the hell is this? No, this is wrong. So we need to say we're doing. Actually, can you remind me again what exactly it is that we do when it is pierced? Can we actually
Okay.
go?
Let's take an example of the call side, just for illustration. So, essentially, what you have on the call side is a credit spread. Okay, you have a short call and a long at a lower strike price, and then you have a long call and a higher strike price. Now, essentially, what you need to do is move that up.
Right.
So everything you have to move up, and you move it up by the wing size, essentially.
Okay.
So, like,
So
for
the
example,
sell moves to where the buy is.
oh, can you say it one more time? What did you say?
So the sell moves to where the buy is.
Yes.
So instead of being at the money, it now moves over. Okay.
Yes, exactly.
Right.
Yes.
And then are you also moving the buy, the long?
Yes, you are. So the original sell, you are buying it back. So the net position is now 0. Nothing's there. And then the original long, you're selling two option contracts. Well, so originally you had one that was a buy. Now you sell two. So the net is that you have one that's sold. And then you create a buy to open on the call side, which is the old at the money plus the wing size. You're moving everything up by a wing size. That's what you're doing.
Oh, I see. Okay. That makes a lot of sense. So now your sell moves to where your buy used to be,
Yep.
and your buy moves by another 7.
Another wing size. Yep.
Yeah, assuming the wing size is 7. Yeah.
Right.
Okay. All right. So in that case, there's 3 transactions that happen.
Yep. 3.
Yeah. Okay. So buy back the short call at the money, the original strike. A rounded underlying price of purchase, rounded underlying price equals self dot underlying price at purchase. All right, what are you talking about? Round. Where do we? I'm just gonna copy the code that I had there. Round expect move rounded. I feel like I'm gonna need to turn off these Nanit notifications. Like every 5 seconds, cry detected. I don't think I need to know all this. It's going off. I can hear him in the background. I don't know if you guys can.
No, I can't.
I heard that that women, they have like a super hearing sense for cries. There's like something.
Yes.
Yeah.
Yes. That's true.
Yeah, you've noticed this in real life?
I had 4 kids, so I know.
I believe it. So you think your wife just has like way better.
I think it's at certain frequencies.
Yeah.
More importantly, you need to use it to your advantage. So when your wife says, "Why didn't you get up with the kid last night?" Says, "Well, I didn't hear him."
I've used that one before.
True, right? Like
I've used that one before, unfortunately.
Yeah, me too.
I cannot lie.
yeah, I feel like that's a very normal thing to do.
Yeah.
That rounded. Yeah, although last night I was
Sound like most of us have more experience than you, Robert.
It really sounds that way.
So we only hear what we want to hear.
Yeah.
Yes. Yes.
Okay.
Hey, Rob, I got a quick question.
Yeah.
Like it's not related to this. I'm trying to trade a cryptocurrency on Alpaca, and I get the message that says crypto orders are not allowed for this account. Are you familiar with that message?
Yeah, you're in Florida. You can't trade crypto in Florida on Alpaca.
Oh my gosh.
Yeah, there's only specific states that you can trade crypto with. And Florida is not one of them. I know this because I've dealt with, for some reason, everyone in Florida wants to use our services lately. But yeah, it doesn't work. So you need to use like Coinbase or Kraken. It's kind of the gist of it.
Coinbase or Kraken. Okay.
Yeah. I would suggest Kraken because that's lower trading fees.
Okay. There's a spell with a K?
Yeah. Kraken.
Okay.
Expiration. Where's the expiration? Expiration is get that. Stephanie needs to go into its own function. Yeah, expiration. Okay. So buy back the short call. So a short call buyback. Option. Break the order. Create order. Cement the order. Okay. So there's buying back the short call.
Yep.
I'm also thinking about margin requirements too, right? Because if you're buying back the short call, then you've gained margin. So that's good. Okay. And then now we go, yeah, why not? Let's sleep for 5 seconds, sure. Sell the call option above the call strike. What do you mean by that, AI? Let's see. Okay, that's right. Call sell asset. I think that's about right.
So this is the long call that you had originally, right? That was above the at the money price at initiation, right?
Yeah, so sell the call above the strike price. Sell 2x actually, the call option above
Yeah, 2x, right? Yep.
2x, but I don't like this above the call strike. That is one wing size above the underlying price. Okay, perfect. We do that. Why are you getting the price? We don't need to do the price. We just create the order. Yes, exactly. We sell that because now it becomes a negative. Holy crap, this thing is complicated. And then buy the call option that is 2 wing size above the ongoing price. Okay. Call buy asset, call sell asset, call short buyback. Okay. Oh my goodness, this is a very complicated thing. I could now I know why you want to automate this.
Yes. I have to do this manually. It sucks.
Jesus Christ. Okay. I think this is it. Let's just run this and just see what happens because this is so complicated.
There's got to be a way to simplify it. I don't know. I
I
can't
don't
think.
think so.
It's too late at night to think about this.
I don't think so. I don't think there's a way to simplify this. Um, I mean, I guess in some ways, but I guess call and puts, but like honestly, let's do the put side as well, just so we can get the whole thing, get the expiry date, calculate the round underlying price. Actually, expiry date we can pull out. Round underlying price we can pull out. At least that we can simplify. So we don't need both. We're going to need it either way. We can pull that out. That simplifies it a little bit. Buy back the short put.
Yeah.
Or right? So it's basically just bringing it back to 0. And then we sleep for 5 seconds. And then we sell 2x the put option that is 1 wing size below the underlying price. Right?
Yep.
Why sleep for 5 seconds? Do you mind me asking?
Just waiting for the fill to happen. Honestly, I'm debating whether it makes sense or not. So one thing is that Lumi bought and actually, I think like I was speaking to Dave about this like yesterday or before yesterday. Right now, Lumibot does orders asynchronously. So if you're not sleeping, you might actually have things filled in the wrong order. And if you have things filled in the wrong order, you can get rejected fills because you're violating margin requirements.
Okay.
So maybe 5 seconds is a little excessive, but as of right now, I'd want to sleep a little bit just to make sure that each get filled in the right order. And actually, you know what? 5 seconds is actually probably a good idea because if you're placing a market order, it'll get filled right away. But if you're, doing any more complex type of order, which I eventually want to introduce, that like moves the limit price or something like that, it'll take some time to get filled, right? So you want to first exit out of the thing that you need margin requirements for, and then you want to enter into something that you're like there's an order of operations that you have to follow, right?
Yeah.
That's the whole idea here.
Don't you have a function that says the order was filled? I thought I saw something like that in your library.
There is, but that would complicate the crap out of this.
Yeah. Understood.
If you think this is complicated, that will make it so much more complicated because then we have to wait for that function to get called, and it comes back, and we have to. I don't even want to think about that because my head's
Yeah.
already. You know what I mean?
I follow you.
This is a lot of steps. Last quantity. I think this is good.
As a software engineer, it's kind of fun to watch you code, or ChatGPT code.
Yeah, I mean, I'm half coding this, right? Okay, I think this is right. I think this is good. This is so complicated. Okay, and now I'm going to take this. I'm going to throw this into that function that we made because there's two different situations where this could happen. Self.condorize butterfly. And this goes into here, and let's see if we need any dependencies. We have a lot of dependencies. Okay. Self, symbol, da-da-da. Yeah, again, I'm not doing much of this coding. There's a lot of this is swing size, less quantity. No, we need DT. Why are you missing that? Okay.
I want to say one thing before I forgot, Robert.
Yeah.
Look at the way you do all of this with the so many years of experience and going to school and all of that. And I spend less than $2,000 a year to get access to your knowledge. I'm not going back to school. Plus the team, see, the team have a lot of knowledge, mastermind, and everything. I hope the people see what I see, and that's what I want to say. Thank to you and to the team.
Thank you. I appreciate that, Paul. That's a very nice thing to say. Appreciate that.
You're welcome.
That's also why we're raising our prices.
I didn't think I want to take advantage of the discount, but when you said somebody asked about the whole year, and it more benefit to you, so I got double discounts. So thank you.
Yeah, no problem. Happy to have you on board. And you know what the thing is too, like, I mean, I'd love to take all the credit, but honestly, like, I mean, this is Kevin's idea, right? Like, I mean, I'm coding it, and like, sure, it's not easy to code, but I'm not the one that invented this. You know what I mean? Right.
That's why I said
we're all working together, right? Yeah.
Yeah, it's my pleasure. I really appreciate having the ability to get this coded, be able to analyze the trades, vary the parameters based on market conditions, so that the strategy can be resilient to what the market is giving you. I think this is the only way to do that in a time efficient manner. So this raises the level of trading to another level. So you don't have to suffer with losses, but you can just do these back testings.
Yeah, this is amazing. Definitely, I agree. This is, again, teamwork, right? We're all working together here, right?
Yeah. So it's all great. Really like
Yeah.
this.
Yeah, I agree. I'm very excited to see the results of this. Especially when we do this, that I'm also interested to see how it did over the previous years. I'm interested to see what if we tweak it a bit. Like there's so many details to this, right?
Right. I mean, there's different market regimes, for example. This past year might be interesting, but how does it do in drawdown and different volatility? So
Yeah, yeah. I'm sure there'll be differences, but my gut tells me like we've built enough of these things that I really feel like this would make a lot of sense, right? Because just judging based off of like the way the condors work, whatever, my gut says that this will work still in previous years. Because if the condor worked in previous years, right, this is very similar to that. But now we're taking into account implied volatility and we're doing adjustments. There's like these added benefits to that. But at the same token, if you lose, you don't lose that badly, right? Like in the Condor Martingale, if you lose, like your account blows up. I mean,
yes.
like this your account's not going to blow up. You're going to lose 10% at most, right? Actually, less than 10%. Right? It's 10% of your margin requirements. So it's even less than that, right?
Yeah.
So the chance of a blow up is actually quite low, and you're using implied volatility in the first place to judge your wing size. So like, this makes a lot of sense to me.
Yeah, I wanted this to be a cash cow. It just makes money.
That's what it sounds like it's going to be.
And then it gives me, an opportunity to explore other trades that might be more sexy, if you will, that are
like Coinbase calls or something.
Yes, like Coinbase. Yes, right.
Okay, so moment of truth. Let's see if this adjustment worked. Do you have your numbers?
Yeah. Okay.
So it says tent was pierced on the downside. We can start with that.
On what date?
Is the 3rd. Is that first day again?
Okay, let me go back into, I have an Excel sheet, but it's not telling me which way it was pierced. Let me go back into OptionNet Explorer. I have to go to the 10th or the 3rd, sorry. Go to the 3rd, January 3rd, 2023.
Yeah. Actually, while you do that, can you give me 1 second? I'll be right back. Just give me 2 minutes.
Yep.
If you could look it up, because here's all the different trades. I have every single trade that it's doing the adjustment for, so we can actually track is what you have matching what this thing's doing.
Yeah.
On that first day. Yeah, I'll be right back.
Okay.
All right. So you have those numbers ready? You there, Kevin? I guess he stepped away for a second. 381. I feel like this is right. Short buyback option, 381. Quantity. I don't know why it's not showing me the quantity. Oh, 4. Okay. And then this one is 374 minus 7. That seems right. Quantity times 2. That seems right. And then 367. I think this is right.
So I'm sorry, I just came back, and I know you were talking while I was out of the room.
I was just going through it. So you ready to go through numbers?
Yeah.
I went through them. It seems right to me, but let's just see if it matches what you have.
Okay.
So you ready?
Yeah.
Okay, so first one, we are placing a trade for 4 SPY at buying the put at 381. Quantity of 4.
Okay.
That seems right. Yes?
Yeah, unfortunately, I did everything on SPX. I have to translate. Yeah.
But you're basically buying back the under like the at the money, right?
Yes, you're buying back the at the money. Yep.
Yeah. Okay. So we got that buyback. And this is buy. Yeah, okay. And then we're selling 374, which is now 7 down. We're buying 8. Sorry, we're selling 8. Right?
Yep.
The quantity is 4, now we're selling 8.
Yep. That's
7
perfect.
down. Okay. Let me move another 7 down to 367. Right? 367. The other one is 374. So 3.
That's 7. Yeah.
374. Yeah, so minus 7. And we're now buying 4.
Yes, that's right. Buying a put. Yep.
That's correct. Okay, I think that's it. Let's see what happens here. I think we're done.
So it made a profit even though it had to make an adjustment.
Correct. Condorize the butterfly. It's now it's condorizing based on the first adjustment loss. Okay. Now here's going through this again. Tent pierced on the downside. It's happened again. We just ran through this. I'm pretty confident that that's doing what it's supposed to do. It lost some money, but now it made it back. Here, first adjustment loss again. It keeps hitting that. It's not piercing the tent. It keeps doing this first adjustment loss.
Yeah, it could be something, a parameter we could adjust. We could say, okay, instead of 10%, go to 15, or, we could play with that.
I mean, it's making a lot of money. Well, that's already at 50K. This is like 2 days.
I'm no worried. It's making too much money.
Yeah, well, rest assured, it's lost a bit now. Still a profit, but oh no, loss is up. So it kind of broke even now at the end.
I wonder why it lost so much money. Right
This is
there, January 6th, maybe.
yeah.
What happened?
Yeah, this is a big loss here. What happened on this day?
Should have been cut off at 20%. What happened?
Maybe our stop loss isn't doing what it's supposed to do. It bought back. There's a lot of stuff going on here. 330. It didn't hit a stop loss. Maybe that's the problem. Maybe the stop loss just isn't working properly. Yeah, 10 p.m., 10%. Made a big win. That's a way too big of a swing.
Yeah,
Look at
that's more than I see.
Yeah.
Wonder what happened there. That's one of the advantages of the butterflies. It doesn't have these big drawdowns. This is a big drawdown.
Yeah, that should not have happened. I feel like the stop loss isn't working or something. Let me see what's going on here. So when we condorize it, take profit, stop for the day. Hit the max loss, stop for the day. Oh, this is what it is. Once you it's so once it condorized it, it started ignoring the stop losses. I don't think we want that.
No, we need the stop. Yeah, we need it.
Still want
Yeah.
the stop loss. Even if it's condorized, it still takes a stop loss, right?
Yes, yes, yes. Yeah, right.
Okay. So that's what the problem is. Let's see if that's still the case here.
We're coming up on the 5th. Let's see what happens.
Yeah, there's that big gain.
Did you delete the CSV? Did you need to do that?
Oh, I did not do that. Good point.
Yeah, the numbers look way different.
Yeah, that is a very good point.
Yeah. We're trading too much. Our broker will freak out.
What the heck? Look at that loss. 71 of 24. There's something wrong with this.
So I mean, another idea, right, is to just put that 6th day and then hit the debugger and see what's happening.
Yeah, look at that. That's
Whoa. How come
way.
what's causing the trades every 5 minutes?
I think, okay, I think I know what's happening. Because I got rid of that code to stop when it's, let's get rid of this. And also, just to make sure we don't hit this again in the future, I'm just going to get rid of this 2CSV. When you guys run this later, make sure you uncomment this. Because that's going to keep throwing us off. Delete this. It's just never going to make it again for now. I think the problem is that it's just condorizing like a million times over. I think that's what it is. We actually, I think maybe we do need to stop it when it condorizes. But
we only want to do it once. Yeah.
Yeah, we only want to do it once. I guess we can introduce another variable. It says last time condorized, you know? we can introduce that kind of variable and go self dot last condorized and in the condorized butterfly function, we'll go here, go add whatever, set the last condorized time, and then we'll go check if we're condorized today. If last condorized, if last condorized date, return. Let's run this. This should get hit many, many times now. It's working properly.
How are you resetting that?
I put a variable in saying self last condorized at the bottom of the function and setting the date. And then whenever the function gets called, it checks, was that today? Right? So it just doesn't do it more than once in a day.
Gotcha.
Yep, there you go. It's hitting it over and over and over again. That's exactly what I expect. Perfect. Now it hit the take profit. This makes more sense. It take profit, we're out. This is looking more realistic. It's that condorizing is just eating everything. Actually, furthermore, I want to say this almost needs to be above. So I feel like this order is kind of important. I feel like these need to be above. First, check if you hit your max loss or take profit, and then check your condorized situation. Because it's returning. So it will like never hit that take profit. So. So I hit a max loss here. Okay. It didn't condorize. Now it's condorized. This is on the 4th. I'm just going to keep calling that. Okay, that makes sense. And now max loss. That seems like too big of a loss. Look at that. It's definitely more stable now, though.
That's quite a bit.
Yeah. It shouldn't have been allowed to lose that much. Maybe there's some slippage in exiting the trade or something. I don't know. You've seen this max loss. Why does it keep this max loss? 31. Yeah. Keeps getting hit. As soon as I reverse the position of them. $38.13. This versus max loss. 35.13. Yeah, that sounds about right. I guess these are like really like whipsaw days. What did you get when you first did this? It was the first few days. Yeah, look at this now. Now that I changed that. Oh, again, it's doing this. Sold. Again, it's doing way too many of these.
Yeah. Yeah.
Why? Stop for today. Stop for today. Stop for today is not none. So give us a little bit more indication as to what happened. Max loss hit, max loss hit. Let's zoom in here on one day. Butterfly created, keeps creating the butterfly over and over and over again. Look at that. Shouldn't be creating a butterfly that often. That's wrong. First adjustment. So there's nothing stopping it from keeping going for some reason. That mechanism seems to have broken somehow. Butterfly created over and over and over again. Every 5 minutes is creating a butterfly. That is not correct. So last butterfly purchase. Last butterfly purchase in here. And then we do return. Regardless, this thing needs to return. But I think we put a return down here. I don't care what the reason is. If there's a butterfly purchase today, we are not continuing on. So we don't need to have return statements in each individual if statement. This could be just universal. So that's one thing. And then it's also going first adjustment loss. It's doing that first adjustment loss hit over and over again. Although that doesn't necessarily mean that a condor was put on. So why don't we add another marker for when a condor is being put on? We'll go here, we'll go add a marker. Square, let's say, not square, maybe we'll go circle or something. Just change it up. Yeah. This is a really complicated algorithm.
Yes. I definitely appreciate that.
Yeah.
This is not easy.
There is definitely a lot going on here. I like what it's doing though, because I've built algorithms more complicated than this before, but they were just like price action stuff. It's like, oh, if you hit this and you hit this, and this actually makes a lot more sense to me, you know?
What don't kill you just make you stronger, Robert.
I like it, you know, like I'm not complaining. I'm just saying, you know, this is I'm just speaking out loud, you know. There's definitely a lot going on. This makes a lot of sense though. Like logically speaking, everything I know about, this whole space makes a lot of sense. Man, if this thing works, I'm gonna drop 30K in this in the next like 2 weeks,
Oh, gosh.
Let's do it,
Oh, you gotta take all your money out of Coinbase. Come on.
I don't even have that much money. That's the beautiful thing about options, right? It's like it's such a small part of my portfolio.
Yes, exactly. Options are wonderful that way. Yes.
Yeah.
And the good thing about that is you can do a lot of risk management with options if you're
Mhm.
smart about it. So
Absolutely. And check if we had to take profit. Okay, so we had to take profit there. Take profit, hit stop for today. This should be stop for today. Now we should hit stop for today. If it doesn't hit it, there's an issue. Right? Stop for today. It did. Okay, good. So that makes sense. So it stopped, it took that profit, and now we're out. Okay, good. I was afraid it wasn't hitting that. But then now, okay, it's no longer the date. This is now another day. So now it reactivates. Okay, good. It's working out as I was supposed to. This is looking a little bit more reasonable now. I think the reason why it was swinging so much is because it was putting on so many butterflies.
yeah.
The return statement in the wrong spot. Okay, well, it didn't make money, but it also didn't lose much.
This is what day is that? Third. Should have made money on the third. What happened?
Yeah, I lost money on this day. Let's see. Go into here. Put on the butterfly, and then here. This looks like it condorized it. Let's actually check this. Wait, probably so many tabs open. There's a bunch of these. Okay. Let's see what happened on that day. So butterfly created, take profit hit, then trade closed. Why did that happen? Trade closed, trade closed, trade closed. So stop. So butterfly created, good. It only did that once. Trade closed because it take profit hit. So that should have been the end of it.
So take profit hit means it made a 20% profit?
Yeah. Yeah, that should.
Why did it lose money?
So yeah, exactly. Take profit hit. Yeah, you should have made money.
Did it go back into the trade after taking the profit? No.
I don't know. Let's see what it did. So it bought 5, sold 5. Okay. And then this should have been this 1155. This 235. What the hell is doing at 1155? This looks like it condorized it. I don't see anything on the charts. Where's condorized?
It looks like it went ahead and just created a condor anyway, without.
Yeah, it sold 10 puts, and then it bought 2. That's condorizing it. Like, why else would it do that?
Yeah, it shouldn't have condorized that day. That was a 700-day profit, and there was no condorized there. I'm double checking it now.
Well, so when you take the profit, right? You know how when uncondorized you say, hey, don't do this again. When you take profit, what exits you out? What tells you not to trade again?
It's a similar thing. It's like a date thing.
Okay.
But what I'm more wondering about is it placed the trade here at 11:55, Jan 3rd. No, this is Jan 4th that we're looking at. That's why. Let's move it. Okay, that makes more sense. So this is the issue. First adjustment loss hit, first adjustment loss hit. But that shouldn't matter. I actually feel like that shouldn't even be on here. Because that's just that doesn't always get hit. First adjustment loss hit. We'll get rid of that. Because then that just gets noisy. Polarized. We'll say polarized. We'll also add some context to this. On the upside, and this will change condorized downside. Okay, and there's adjustment loss hits, and then there's trade closed. And I close the trade here. Yeah, so I guess the question then is, because Kevin, you're saying it should not have condorized that first day.
No.
I think that's the issue. Because that's where the loss happened, right? Because it made a loss and then condorized. That is what it's supposed to do.
Yeah, yeah. Let me go back into the trade and redo it. I think that's the only thing I can
do if you did this on the SPY, so at least that way we can like match it up better.
Yeah, okay, let me do that. SPY. I'm doing that as we speak.
Yeah. Yeah, because just looking at this chart, this kind of actually makes sense. I'm not actually very surprised by this because the price of SPY just plummeted.
What price do you have for that date when it starts?
What for SPY?
Let me say it differently. The at the money, what was the at the money? If you go to the first, wait a minute.
In the price of SPY? This is the price of SPY. It started at 380.
Okay, that's close. The at the money at 10 o'clock is 382. Okay.
Yeah. I mean, just looking at this price chart, this doesn't seem that surprising that it pierced and it condorized down here. That actually seems pretty reasonable. And then it shot back up the other direction. Like, this is a pretty big move. Went from 384 down to 378. So 384 minus 378 divided by 384. 1.5% move, or at least peak to trough or start to bottom, 1.5%. That's a pretty big day, you know, like this moves a lot. So I'm actually not that surprised that it condorized here. And then here it exit at the end. It made some money after the condor. It made back some money.
Yeah, I'm still going through it.
Yeah. And my brain's starting to get fried, not gonna lie.
Yeah. Yep.
Yeah. I feel like we're so close. I'm like itching to get this finished, but like it's like 1 o'clock in the morning. We're so close to this. I feel like there's just like there's like something stupid that we're missing here. Maybe why don't we do this? Why don't we do this, Kevin?
Yeah.
We can run this. You can look at the results, and then we can compare to what you actually got.
Yeah.
And we can kind of go from there.
Okay. I mean, that sounds fine.
So I want to run this. I'll run this for a couple days. Like 115. I feel like we're so close.
Where can I get the output? I just want to
I'm
check
gonna
it.
send it to you.
Okay.
I'll send it to all you guys. I'm just gonna run it and then I'll put it out. Because you can't run this at the second, because I have to update LumiBot with that change for 0DT options for getting the IV for 0DTs. So I'm going to do that after this call. I'm going to actually update LumiBot, and I'm going to put this code up, and you'll be able to run this code too. But in the meantime, I'll just give you the results to kind of make your life easier.
Okay. That's great. Yeah, I think I need to look at it with a fresh set of eyes here.
Yeah, it's getting late at night, and it's like, you know, it's such a complicated thing going on here.
Yeah, that's weird. It's just, I would have expected a little better.
Yeah, there's something missing here. We're missing something. I bet you it's something really stupid that we're not paying attention to right now. This is, here we go. Butterfly created, condors, trade closed, butterfly created, take profit, hit, trade closed. Why did it close the trade after it took a profit? It should have already been closed. Bought, that's buying. That's closing. Oh, no, it just posted that, but it's not actually. Okay. That's fine. This is the next day.
Yeah, in the meantime, what I'll do is I'll do the same option head explorer with SPY, so you can get exact
Yeah, I think that would be
relation to
good.
what this is doing. Yeah.
Yeah.
Let me do that as well. Since
Yeah,
all my data is on SPX.
yeah, it'd be a lot easier to compare that way.
Yeah, let's do that. I got to get a
Okay.
fresh. I have to be fresh to do this.
Yeah, this is too complicated to do at 1 o'clock in the morning.
Yeah.
You know, like, okay, where did I have this? This is in here, and then logs.
I'm so glad I'm on the West Coast.
Yeah. Oh man. I'm gonna be in your neck of the woods not too long from now. Where
When?
are you in LA or are you in the Bay Area?
No, in Portland, Oregon. So
you're in
we
Portland. Yeah.
yeah.
Yeah, I'm gonna be in the area in May. That's why I'm saying that.
Oh, okay.
Yeah. Okay, I think this is the one. Stats tear sheet. Okay. I'll open up the chat. Put into the chat here. Actually, you know what? Why don't I do this? I'll put it into Discord, so all you guys can look at it. So if any of you guys want to take a look at it, you can look at it here. So that way, at least we have like more sets of eyes on it. Okay.
Do I have access to that?
You're on our Discord, no?
Yeah, but I
You should see live algor. Sometimes what happens is you have to go here and you have to go show all channels. That happens to people sometimes. I feel like
sorry, where did you go to do all channels?
This is on the desktop app. I don't know if you're on phone or
Oh
not.
yeah, I see him now.
Yeah, you go here, show
I
channels.
don't. Yeah, thank you.
Yeah, no problem.
Is the are you gonna share the code?
Well, the code is part of the drive. You know, it's in the live algo hour drive is where it is right now. I need to make a change though in order to be able to even run it. So let me actually put the code inside the live algo hour thing right now. So here it is.
Because I'd love to debug it through and walk through.
Yeah.
I understand you got to make a code change. I mean, I can also go in there and make a change. It's not a big deal.
Yeah.
It's the beauty of being a software engineer is I can do what you do.
Yeah. Yeah, it's definitely very helpful. What stupid thing with the back testing again.
The complex part is like I don't know what stock options are, so the things you guys are talking, I have no idea what it is.
It definitely helps to know what a stock option is, that's for sure.
Like it's a rough introduction to a lot of words and definition you've said today. I have no idea what they are.
Yeah. Yeah, there's a lot going on. Stock options, like by itself, is fairly complex. Yeah.
I'm
Yeah,
kind
it
of
is.
in the same boat. I was wondering though, you said earlier there was a change to Lumibot itself. Did we end up actually using that change in this algorithm? Because I thought
Yes.
we did like some 85% thing to
No.
compute. Okay.
No, we didn't end up doing that.
Okay.
Um,
And you said you would share the source. Would it eventually end up in GitHub?
It will eventually be in GitHub, but right now, the way that you get to it, you have access now because I think you just got this. So you go into lumiwealth.com, our backend server, the lumiwealth.com, and then you go to course recordings. So under my account, course recordings, my account, course recordings. And then you go under live algo building hour. And then it's in here. This is the, you click on this button here to get the code. So I'm going to put this in the chat so it's a little bit easier for you to get to. Once you log in, you'll have access to this. Because I think you purchased earlier today, so you have that access.
Yeah, I saw on GitHub that it looks like forking the any of those projects is disabled. Is that it could be possible for us to fork those and submit changes as pull requests if that would be useful. But
Yeah, I didn't know that was disabled. That was not intentional.
yeah, you see there the fork button is grayed out.
Oh yeah. I did not realize that was the case. I gotta look into why that is.
It's probably tied to security and you want to make sure you keep things private, but if that was enabled, we could fork these projects and then we could
And
submit a pull request to you that would have changes that could be useful to somebody else. They don't have to be
yeah,
merged, but they could be in the history.
yeah, I agree with you on that. That was not an intentional thing. How do I change that? Here's the settings. But this algorithm isn't on GitHub yet, right? This is currently just in the Google Drive. If you think it's helpful, I could put it into the GitHub. Although that's a bunch of extra work right now.
Yeah, don't worry about it. I got the link, but just something I was noticing.
Yeah, yeah, this somewhere in here. Allow forking. It won't even let me click on that. Why? Is it because it's private?
It's yeah, GitHub has a lot of controls over access management, so I would have to it's been a while, but I think yeah, you have to make sure that because what that would do is it would copy the project into your private home workspace. So I would have a copy of it in my GitHub home. So I don't know. I would read about that offline because I don't know exactly what the rules are for that.
Yeah, I have a feeling it's something to do with it being a private. Is the easy way to check. If I go into one of the public ones, will it let me do that? And if you go into public, there's diversified threshold. Fork is enabled. So I think it's something to do with the fact that it's private.
Yeah.
I added all you guys to Teams. It's underneath this organization. Yeah, there's something going on. It's something to do with it being private. If you could figure it out, let me know.
Yeah, I'll let you know.
Because you're right. I would like that to happen because then we're all collaborating on this stuff, right?
Yeah, like one thing I noticed is we could use like dev containers and things like that to make it easy to set up a consistent environment between our different environments.
What do you mean by dev container?
Like just so the dependencies and all that we're using, it looks like y'all in this project you're using Polygon and Tradier and I'm not sure what dependencies are required for those
Pretty much
platforms.
just Loomibot. Just
Okay.
install Loomibot, and that's pretty much it. I think that's the only like real dependency.
Okay. Well, it's probably not anything major, but if someone was having problems getting set up with an environment, like setting up the dependencies, what I've seen done is people use VS Code's dev containers. There's an extension that you just define the settings for a container and the dependencies, and it pulls it all in, and it's the same for anyone who checks out the project.
That to me sounds like Docker or like a requirements.
Yes, it is Docker.
Docker. Okay. Okay. Yeah, I'd be open to that. If you let me know how to do that, I can do that. You know.
Okay.
So like I can add like a Docker file, or I could add what was that thing? Docker, the other thing that they have.
It's devcontainer.json. Yeah, they have Microsoft has its own Docker dev containers that are pre-built for Python. So there's one for 3.11, which seems to work with the Lumabot that I was working with. So
Right.
yeah, I
Okay.
can pass that to you what I was using and
Sure. Yeah.
yeah.
If it's easy, I'll throw it in. If it's just a JSON file, why not? Like it's this easy. But in general, I mean, it's pretty simple. All you gotta do is just install Lumibot. Like that's the only dependency. None of them have like any crazy dependencies.
Well, you have, right, your Python libraries and other things that you have to configure correctly for it to run. That's where Docker would come in and help out. That's
Yeah,
what you're
for
talking
sure.
about, right?
For sure. It makes the environment easier. Yeah.
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 There's other ways to achieve that as well besides Docker, but
most popular, right? We can do like a VM or something like that too for Python. But I don't know. I'm personally a fan of Docker. I think it's probably one of the easier things to do. VM is another big one, but VM has a lot of issues with it. Like it bothers me sometimes. I hate using it personally. I don't know if you guys feel the same.
What about Lambda functions on AWS? Would that work too?
I would not put this into a Lambda function, no. The reason why is because a Lambda function is meant to be for servers and it's going to look for an open port. So you want to run this in something that doesn't look for an open port and like runs continuously. You can't, I mean, you can jerry rig it to work in a Lambda function, but like it's not the intended purpose. You know what I mean? Yeah. What we do is we use Replit, right? Like Replit, I personally think it's really good, right? Like, I mean, Replit, you can like, it has a code editor built in and it's easy to run. And like, I personally love them. I think they're great. I've never had anyone have issues with Replit. You know, like it's kind of the same thing. It's almost like a Dockerized version of Python, right? So we're all using the same thing, right? They have like Replit files, which is kind of like a Docker file. You know, it's like they kind of have that whole same type of convention. So that's the way that I've shared with people. But I can understand you guys if you guys are like actually developing this for real on your computers, like you don't want to do it on Replit, right? Like I mean, I think Replit is good for people that are not like, you know, do coding for a living, right? If you code for a living, you want to do this on your own computer, and you'll probably want to do something, you know, VM, Docker, or something like that, right? If you want to run this on AWS, I would personally just run this in like a regular box. That's what I would do. Was like an EC2 container. I'd do something like that. I containerize it, put into a Docker, and run on EC2. And the Docker file would just basically be run Python. That's it. You know, it's nothing complicated. Very simple.
EC2 would be too expensive. If you have some other way to do it on a server that's more cost effective, probably would be a better way to do it. EC2s are not cheap.
Yeah, I mean, the way that I haven't finished doing this, it was complicated to do this, but I did it using what was it called again? Kubernetes, right? And I was running stuff in Kubernetes, but I mean, I guess that's more complicated. I guess that's more expensive if you're only running one.
Oh yeah, that makes it.
If you're only running one of them, that's more expensive. For me, I was like trying to run 100 of them at a time, and Kubernetes was way cheaper, you know. But if you're only running one of them, I mean, I would try honestly, Replit, I think is the easiest way to do it. We literally have a button on it that says run in Replit. You know, like it doesn't get any easier than that. You know, you literally click on that button and it runs. You know, like it copies it over Replit and you hit the run button and that's it. And actually you just fill in your secrets and that's it, you know.
Is there any cost to that?
Yeah. There's a cost. Replit, I think you can use it for free. I think you can use it for free for a small thing to run it, but then deployments cost money, and getting their Replit core, they call it core, cost money. I think it's like 15 or 20 bucks a month, which is pretty cheap if you think about it, because you can actually run multiple of these things using that one Replit core. You know, I think this is the easiest and most cost-effective way. Personally, that's why we made that button in here. That's why we have a run on Replit button. I know these guys at Replit. I would love to actually meet them in person because I keep talking to them all the time. But I think they're a wonderful company. They do all the stuff in GCP. What technology do they use to deploy? I forget. But in GCP, I think it's kind of like a Lambda function. It's almost like a Lambda function that they use in GCP. I think you can jerry rig a Lambda function to run this if you really wanted to. You just have to make it ignore the fact that there's no open ports. If you could do that, it should work fine. You know, and just that it runs it continuously.
Yeah, no, I mean, if it's a matter of like 10, 15 bucks a month and you already have it all set up, I guess, you know, I mean, why go through all the trouble of setting up Lambda functions and AWS complications?
I agree. it's like 10, 20 bucks a month, you know. I would just do it through Replit personally. You know, like that's literally how I run all this stuff. I do it that way. I just find it to be the most convenient because they have like a full editor in here. So if I needed to change something with it, it's very easy to do that. When I run it, I have a console here. I can see what's happening. When I deploy it, I have my logs, right? It's just like really easy. Replit, I think is just a wonderful company in general. I love these guys. I think they're fantastic. They're one of the best tech companies I've seen in a while. I think that they just raised money at like $1 billion valuation. I'm not surprised. These guys are killing it. Like their customer service is off the charts good. They're constantly getting me on phone calls, asking me about like product development stuff. Like these guys, like they know how to run a company well, you know. Um, I would use them personally. I mean, not I would, I do use them personally, you know. So if you want to know my opinion, that's what I would do. But there's obviously more ways to skin a cat, as they say, right? You could Dockerize it, you could do all sorts of different stuff. But this is, if you're asking me what I think is the best thing to do, I use Replit. That's what I use. We literally have a button to do that. So cool.
Hey guys, I'm gonna have to call it a night. I gotta wake up early, so I gotta wake up in 4 hours.
Kevin, you don't want to listen to more conversations about Docker? What are you talking about?
Hey guys, you know, you're having a great time there. I really appreciate that. But yeah.
All right, Kevin, have a good night. Cheers.
Yeah, you too, guys.
You got the files I sent, right?
Yeah, they're in Discord. Yeah.
Yeah, they're in Discord, and I also sent them in the Zoom chat.
Oh, in the Zoom chat too? Okay. Yeah.
Yeah,
Let's see.
and they're in both places, whatever.
Okay. Yeah, they're on Google, right? Google, yeah.
Yeah.
Your Drive. Okay. Perfect.
Well, yeah, the algorithm itself is in Google Drive.
Right.
I'm going to update LumiBot probably right after this phone call. It's a quick update to LumiBot just to change that implied volatility thing that we fixed today. So I'm going to update LumiBot with that. So if you want to run it locally, update LumiBot first.
Okay.
If you want to run your computer, and give me at least like an hour or two. I'm going to do it right after this.
Okay.
So then you could back test it yourself if you wanted to. But then I also put into the chat the actual like Excel file and HTML file and all that, so you could like look at this that we were looking at and follow the trades.
Oh, okay. I see them now. Yeah.
Yeah. Okay.
Excellent. Thank you.
Yeah, no problem. Okay. All right. I think it's time to call it. It's been a long day. I'll see you guys next week. We'll keep working on this. Let's talk over Discord if you guys have any thoughts on where this is at. Like I said, I'm gonna update LumiBot in the next 15 minutes with this change that we just made. And then we can talk over Discord and we can continue on this the next week because I feel like we're very, very close. But Kevin,
Yeah.
I'm definitely interested in your feedback because, you know, you can actually go through this like from like a realistic, how are you trading this? I know how thorough you are, so I feel like you'd actually be able to look at this from a very good perspective.
Yeah, I'd love to take a look at it. Absolutely. I'm fried right now, though. Sorry.
Yeah, I hear you. I agree. I agree. Okay. All right.
All right.
Guys.
Thank
Take
you.
care.
Good night.
Thank you, everyone.